We are live. Yeah, we're live. All right, guys, what's going on? It's your brother African Emporium. Let me cut this down here on the back side here. Again, doing something rare, it would seem, right? Doing a weekend kind of update. Again, I was talking with some of my, my family in the my Facebook little, investment group we got going on. And got, a lot of the guys in the Discord and Twitter, and they were like, again, you've been doing somewhat pretty decent on some of the options and earning plays of late. Could you come on and kind of explain a little bit what you do and how you, assess certain things, and what do you look for in terms of taking some of these plays? So again, while I do have a little moment of quietness, again, my family is out running errands. They'll be back at some point. Again, I'm just trying to squeeze in a little bit of time before I can. And again, this upcoming week, as I've been explaining to some of you guys that's been following me, a little bit here and there, that, I'll be really off the grid a lot next week. Again, it's been a long, tumultuous 2 months. Some of you guys know, buying another investment property here, and we're closing next week, basically. And it's been a journey. Again, it took a lot of mental focus to really understand when you're dealing with different barriers, and not necessarily bad barriers, but things that kind of roadblock you from your time to be able to really be effective at studying the market from day in and day out, especially if you intraday trading or whatever. It's been a challenge, and I've still been able to been good in some aspects and lacking others. But again, that's a whole, another avenue in my evolution and growth, and learning how to compartmentalize my time efficiently so I can still be the best trader I can when I go into the market. Right. So, that led me to do a little bit more, I guess searching for different aspects of trading to really, lessen my risk value, so I don't have so much, a stress test trying to force trades that I should not necessarily take because of the fact that I didn't, study enough to the point where I could feel convicted to take the trade. So basically what I'm saying is I went into the option market, of late, excuse me, a lot. And I've been very successful thus far in it. I just use the same parameters of thought process that I do with a common stock. Again, we still got fundamentals, we still got technicals, we still have the whole market sentiment, global politics that kind of affect the market from one thing over the next. And you just put it all together. You bake that cake and hope it come out sweet and it don't fall on you. Obviously, for some of you guys that got that that cook's touch. Again, the goal is to make sure that we're making good decisions based upon what the market is offering us. And as we always know, that the market is always right. The market is always right. And if anyone tell you different, that you following, and they tell you, no, man, it's not that, man, it's this and this and that, they're leading you wrong. Yeah, because you have no control over the market. I mean, our retail dollars do its little part in and out of these different little assets. If they small, got low floats, whatever, but you really have no say so over the market, no matter how much money you pump into it. So again, you have to be under the understanding that you're here for any kind of opportunity that presents itself, be it up, be it down. Simple as that. We don't trade channels. And you could, but again, we're not here to watch the stock go flat, flatline throughout the day and get excited about that. Unless we're going long, meaning we got long-term plays out there, investment type, plays out there, then that's fine. Again, because you want that stock to stay up and moving upward, much as possible, or at least stay, stay flat on the day. In a lot of ways. So again, with that being said, we are opportunists. If you're a trader and investor, you're an opportunist. Simple as that. Get out of your feelings if you're thinking different and thinking that it has to be a certain way, or you got too much of a higher moral ground in aspects of how you look at the market, kind of self-righteous mentality. It has to be one way or no way. You will never be successful in this market. You can be successful in being in your comfort level. Don't get it twisted, but I'm saying to really maximize this market, you have to realize that you have to come outside of your comfort zone and deal with a lot of different avenues and strategies that the market offers you. Because again, there's no 2 days alike in this market. Regardless of a trend is set and it may be a bearish tone, or a bullish tone, right? Or there's some indifference there, or you got a lot of washing out, trades getting washed out, you know, it's really choppy, you know, but again, in that moment, you still need to learn how to capitalize on it, right? And I always hear people say that, you know, things like, they'll say, well, hey, bro, you know, you seem to always find a little, you know, little nugget in the market from day in and day out, man. Man, to me, man, this market sucks, man. It's choppy, and I get it. It's never, again, the most, you know, optimum setup. It would be lovely if we always got a peaches and cream setup every day, right? Someone just showed up on your front door, your porch, knocked on the door and said, and you open the door, and they just hand you a big bowl of, you know, your favorite ice cream with all the toppings, and then they hand you a water cash, and then they hand you keys to a Lamborghini, and you be like, oh, okay, so this is the life, right? Yeah, if only it was that simple, right? Then we all would be, you know, so-called living the dream. But that's not the case, you know, and that's why it's important that we come into the market with a realistic expectation and realize one thing is for certain. Realize one thing is for certain. That market is going to open up if it's scheduled to open up. And if it opens up, there is going to be opportunity there for you to capitalize on it. Facts. If $5.7 trillion is moved around the world daily in global transactions during so-called market hours of the day or business hours of the day, how can you convince me that there's no money to be made? How can anyone that's obviously, you know, you following, training under, whatever, convince you that there's no money to be made? Again, not all trades need to be taken. Let's not get it twisted. There's a certain, you know, there is discipline in play here. But if you come into the market with an open mindset, you know, again, you've evolved a little bit where you can do different, you know, trade different aspects of the market. You're just not just going, you know, one way and one way only, because, you know, that's where you are in your growth, and there's nothing wrong with that. Again, we all start somewhere, but realize there's money to be made. It's a mindset. It's conditioning of the mind. It's a mental. I like to look at it this way. Sometimes, you know, we overthink things. You ever people tell you like you overthinking it, and it's not that serious. All right, and then we'll go into a trade or take that into our trading life with that same kind of mental disposition. Like, you know, man, you put all this pressure on yourself. You convince yourself that you can't be successful at this, or you can't do it at the level that you know you are, you know, warrant to do it at. And then you talk yourself out of good opportunities. You talk yourself out of good trades. You're second guessing yourself on a lot of plays. You're having bad entries because of that, bad exits because of that. And now you're off your kilter, so to speak. You off your game. That comes with understanding that, you know, you're overthinking a market, again, that cares nothing about, you know, you or your investment dollars. It has its own, you know, agenda at the end of the day. So if you change that mindset and look at the market like, you know, consider yourself like a sniper, right? Some of my military guys that might have been in the, you know, been in the service like I have, whatever. Consider yourself like a sniper, right? Your goal is to be what? You know, silent but deadly. Your goal in this market is to be silent but deadly, right? And you will position yourself, you will put in enough research or recon to put yourself in the best position, right? The best position or wherever it is, the best locale, whatever it is, to make sure you pick off your what? Your target. And our target is what? These different stocks, right? For whatever reason they, you know, value they are, for whatever scenario that has these stocks moving, and or, you know, for whatever reason, again, that's what we're here for. We're here for the price action. We're here for volatility. If you are, again, an intraday trader or a swing trader that has particular, you know, percentage goals in mind that you're trying to hit on a certain time frame, right? We're not just languishing in the market, again, like a long-term position or short-term long position, so to speak, right? Or like a quarterly position, right? So again, under those auspices, again, you need to trade like a sniper. You need to look at the market like a sniper, and you need to make sure that, you know, anything that you, again, set your mind to in terms of how you're going to trade for that day, that you already have it on paper before you take that trade. You have a goal in mind before you hit that buy button. Because if not, you're gambling. You're not trading. You're not investing. You're literally gambling. Or you know, the whole FOMO thing, fear of missing out. You chasing something because somebody came in, threw a tick out there. You get excited, and it happens. We all go through it. I mean, I'm sure Warren Buffett has moments like that still to this day. He get a little FOMO. You know, Charlie, I can see it now. Charlie Munger coming into his office like, hey, Warren, man, you know, we might need to add to the airline position. You know, I know we said we would never buy into the airline industry, but since we took that position, and looking at UAL last week earnings, man, they went ballistics, man. We might need to double down on our position. And he might have came in and said, no, I'm just gonna put this much in and that's it. And now he's like, oh man, you might be right, Charlie. Where they at right now? Man, do we got time to get in before the big? That's a part of this whole journey. It's exciting. It's the ability again to find yourself in a position where you can take a certain amount of capital, match it up against the metrics of the market in terms of where it's at, meaning an asset, be it whatever you trade, ETF indices, options, whatever, and then say, out of this scenario, under these criteria, I can see, a 3% return or a 5% return or a 20% return under these measures, under this chart, under the fundamental, under the investor sentiment, and this is what I'm targeting for. Right? I will set my barrier at this point here, though, and my stop loss, again, my back door at this percentage. And again, you go into the market with that kind of mindset, right? You have to have a plan based on what I'm saying, because without an effective plan, again, you will find yourself spinning the wheel, like Wheel of Fortune, a lottery or something. You'll be from one moment to the next, and then you convince yourself, it's okay, I lost $15 today. It's okay, I lost 30 today. It's okay, I lost 5 today. Okay, well, I made 20 back yesterday. Okay, then, man, it's okay, I lost 50 today. And what happened is your win to loss ratio begins to, show that you're losing more than winning, right? And you're still trying to convince yourself that you're doing okay. And, but that's just not how this stuff works. And I've seen a lot of, peers of mine, because you guys, all you guys that we all hang out together in the Discord rooms, Twitter, Stock, Twitch, Facebook, whatever, we're peers. Don't get it twisted. We're peers. No matter how new you might be into the game or how well advanced you are in the game, we still peers, right? There's no one better than the next person. That's an asinine logic to have anyway, because again, that's not the kind of competition that you need to be breathing or brewing within your circles, right? Because again, we need all eyes and ears on deck every single day when we trade these financial markets. In the discussion, hands down, it is a think tank. Your Discord rooms need to be a think tank, not a come in here and hang out and just shoot the crap all day long and talk trash and be condescending to other traders and act like you larger than life, or coming in and just be silent as a mouse when you need to be understanding and asking questions. How can I get better at this? Right? Because again, what makes this such a unique craft is that we all see the same charts every day. We all see the same stocks moving pretty much every day if we're in the right place at the right time. That's what I'm saying. You see the same stocks that Warren Buffett sees. You see the same stocks that Jamie Dimon sees, and the rest of these so-called big traders out there. What's the difference? The only thing that separates you from them is what? Capital and knowledge, so to speak, or experience. That's it. Yeah, you may have a little insider trading going on here, and that's fine, because we know the industry is still ratchet. We ain't stupid, but we are methodical. We're very methodical in our approach. And our approach is just this. Again, we are opportunists. We're here for any and everything that this market can offer us in any given moment that it presents itself. Simple as that. That eliminates being self-righteous. That eliminates being, overly, brazen and bravado, like you just, again, better than any and everything out there. That eliminates all that, because you realize now you just as vulnerable as the next person. No matter how much experience you have, no matter how much money you have to be able to trade with. I hear people that, oh man, you only made $50 today, man. That ain't enough to, enough to put gas in my lawnmower or something. And I'm like, who gives a damn what you think? What works for me works for me. It's a part of my evolution and growth, right? And if people will try to kill your spark or kill your ability to realize that your goal is to be consistent, right? Your goal is to get on base as much as possible. Again, I always tell people, this thing is about base hits, right? Longevity and continuity is garnered around consistency. And the only way you're going to be consistent, is learning how to make proper decisions based upon variable metrics that's coming at you every single day, and then you still walk away with a victory. And even when sometimes you take a monetary loss, be it small, if that's the goal, to cut your loss fast, but you still walk away with a victory, because again, that's a level of experience that this happened in that moment. Right? And you might have taken a trade and it did the opposite of what you had planned for. That happens. Again, show me a trader that nails 100% of their trades, and I'll show you a person that's very, very liquid or good at prestidigitation, right? He's sleight of hands and all that. He's a Houdini to the umpteenth degree, right? But that's just not the reality of the world that we live in as investors and traders. And we know that to be true. Your spouses and your friends and your peers may think that be the case, but they're gonna be like, man, you gambling, all this foolishness. They don't know. But again, that's that fear. They call it fear. That's why they, whatever, stagnant. All right. You're here to boom, take it to the next level. Right. You're gonna find yourself a year from now, 2 years from now, 3 years from now, putting the kind of money in your bank account that you never ever thought you could ever possibly do. As long as you stick to your guns, stick to your discipline, realize that this market, owes you everything, right? It owes you, right? That makes you want to go out and search it out, the best you can to be the best at this. And then you, again, walk away, proper in terms of knowing that you did all you need to do to be able to win every day when you trade the market. Be it you don't have to trade every day, but whenever you go into it, that you want to walk away with a victory. Just my point, right? So again, I always want to premise those kind of, scenarios or sound bites or however you want to look at them into play, because a lot of us will get ahead of ourselves too much sometimes, again, overthinking, and a lot of us are underappreciate our skill sets a lot sometimes. You kind of just, don't give yourself enough credit. Again, it's one thing to be humble, and it's another thing just to be kind of just, just really just, well, I don't deserve it. And that'll kill you got to have a tiger mentality in trading too. You can't be overly passive, basically what I'm saying. You have to understand what you're dealing with, and be balanced, basically, right? It's just about having a good equilibrium or a good circadian rhythm, so to speak, right? A good heartbeat, consistent, rhythm. And from then you just let the chips fall as they may. All right, so I just want to open up with that. Again, as you can see in the description box, I have it set. It's like a little weekend earnings update, market update. Future set, I said future set to open up flat. That's before the market opened up. I got a feeling that the market's going to open up a little flat because we still got all this trade, tariff stuff kicking us in the behind. You got the FOMC meetings. That was last week. That was just all over the place. And the Fed, and Jerome Powell, again, they still had that very hawkish mentality, and they constantly trying to, keep the dollar at a certain rate. They don't want it to kind of really, get out of hand. So they're going to keep threatening the idea of hitting it with what? With tax, as soon as the dollar gets moving up, let's hit it with some more tax. Let's keep capping it. And basically what that does for the bond market, right, especially the 10-year, it keeps it in a very, very volatile state of late because of the fact that at any given moment, with so much things that's going on in terms of the geopolitical aspect of this country, beyond the trade war, tension can pop off or issue can pop off, right? And guess what's going to happen to the USD dollar, right? And guess what's going to happen to the bonds, right? Because I always tell people, here's where you need to start paying attention to. That's for some of my newer people. If you're watching the bonds market, anytime the bonds percentage yield value get up to near 3%, start paying attention. If it gets above 3%, if you got any kind of long-term investments out there, 401k, Roth, TSP, all that stuff, go check your TSPs. Go check your Roth. Go check your retirement stuff. Because it's going to get ugly. Obviously, bonds are what? Debt, right? That's what people that bet against you defaulting on your debt, basically. And we know that this company is highly loaded in debt. Trillions of dollars in debt. And we racking up new every year. Every year is more and more debt. All right. No one's paying this stuff off. Like, show me where the money coming from. Number one. Right? A lot of these companies are kind of going overseas, building their businesses up because they don't want to deal with this. And that's what this whole Trump tariff thing is all about. It's like America had this moment and left the keys to certain presidents at a time when I guess the economy was starting to kind of turn around, especially talking about coming out of the Great Depression to where we are today. And it's like you gave the key. It's like the Ricky Bobby syndrome. You gave the keys to a 2019 fire engine red Bugatti to a 5-year-old kid, and you like, here, take my keys and go enjoy yourself. And he's like, what? Wait, what? Okay, I'm finna go fast. And he just fishtail all over the place, just tearing up the car, literally. And that's what happened. That what happened to a lot of the these different exchange of the hands in terms of the books. And because of that, again, that's why all this debt is implied. And again, all these so-called bull runs that we had as of last year, they're never going to sustain, because again, there's still too much implied debt and risk still affecting the overall aspect of the market. And because of that, again, that's why me and you We need to be focused in learning how to look at the market from a business owner perspective. Remove your feelings from this. Who cares who your favorite company is? I really don't care, because guess what? Your favorite company, if I see that it has bad books or it's doing something shady or whatever the case is, I'm going to short it with a vengeance. And you may be going along, and then people get you do that. Man, I'm thinking short, man, I hate him. I see a short seller, I kill him and all that. And I'm like, what? Dude, it's not that serious. You got to understand the market is this not how this works. Like the commercial back in the old day with the old lady said, this not how this works. This is not how the market works. You got to realize you're here for opportunity. Remove your feelings and upgrade your sniper prowess, your mental focus. And let's go get this market. Let's go get this bag. If you ain't here for the bag, what are you here for? I hear people tell me that, man, I ain't here for the money, man. What? Okay, well, what's your angle? Enlighten me. I ain't down in your position here, but what's your angle? If you're not here for the bag, what's your angle? You got to be here for the bag. We're not getting up every day. We're not studying till wee hours of the morning if we're not here for the bag. All right, someone's calling me right when I started doing my live streams. How that happened? All right, that's fine. But they just hung up. Okay, great. All right, moving on. All right. So again, I just want to premise that for you guys, man, because I think, as I always tell you guys, man, you guys are super exceptional people. We are exceptional beings, guys. Y'all got to realize this, right? We're doing things that most people won't do. We're doing things a lot of our parents not even doing. And they missed the boat on doing it at some point because they had a lot of fear, capitulation going on in their mind about investing and all this stuff. And, again, they didn't realize the true path to financial literacy lies in the global financial markets. Simple as that. Convince me otherwise. Again, if we are in a capitalist society, we know what capitalism means. I can pull up the definition. We need to go do a little refresher course. But you're in a capitalist society, and you're going to convince yourself that it's okay if you just, barely get by and live a mediocre life based upon someone that's leveling positions over you every day, telling you what to do, when to do it, how to do it, where to do it. Basically, all stuck in the kind of job mentality, the ball and chain mentality. You're only going to do as much as they allow you to do, and you're comfortable with that. Again, no one beating down the door to teach you about financial literacy. No one's beating down your door to teach you, about how to properly leverage yourself and use, the global markets as a benefit to grow your capital, to grow your net worth, so to speak. And it baffles me, right? And I'm like, okay, well, how will you get ahead in life if you don't understand, other aspects of learning how to get supplemental income, being investing? You don't have to be investing. I get it. Everybody can't do this. I get it. I'm not going to never say everybody can do it, and I'm saying it only from a perspective of maybe how like a lot of us trade. Like we snipers at this, right? They can learn how to invest and do some long-term stuff. Again, they may have, the mental, comfortability to be able to do this like we do. But again, at the end of the day, I feel like everybody that understands or would rather put themselves in a position where they can have, steady growth and development in their lives, they need to learn how to invest in the markets. At some aspect, I don't care if it's Forex, again, crypto, again, futures market, the ETLs, mutual funds, whatever, common stock, OT, I don't care what it is. You need to learn how to use the power of your dollars, put them to work, and learn how to allow compounding interest to become your favorite best friend. And as I always say, there's no such thing as best friends in terms of, physical values and best friends. No, I guess it's a little experience talking right here, a little wisdom. Again, whether you take me seriously or not on this, not, but there's no such thing as best friends. There's only permanent interest, right? There's no such thing as permanent friends. There's only permanent interest. We have to have a permanent interest for us to be able to what? Be able to be tolerable of each other. Simple as that. Because if I can't tolerate you, then how can we call ourselves, friends, right? Or, all this kind of, we caught up in emotional stuff. No, realize business is, that's why they say business is business, and, friendship is friendship, and you got to separate the two, right? Even with family, because you realize at the end of the day, again, if you're trying to grow your scenario, it requires you to treat everybody like, like you have to be accountable. Simple as that. Yeah, I know we've been like this for 30 years, but you said you was going to be able to meet your end of the deal here, right? You said you was going to be able to fulfill your side of the aspects, and that's why it's important to realize you got to learn how to separate the two. And in doing so, again, you learn how to be, accountable for yourself and be disciplined in terms of being able to hit your goals, because your goal at the end of the day is what's keeping that interest alive. If we in a partnership, the interest that we're going to do, each person going to pull their weight is going to allow us to hit our goals. And I'm saying all that to say, I know it seems like, okay, you're going off. I'm saying all to say that's why it's important that we all realize that's paying attention. We need different Discord rooms, Twitter, whatever. That's why it's important to realize that if you're not in there to be an asset, then don't wreck the other traders' opportunities. Don't be in there downing other people and criticizing them and all this other stuff, because you're not ready to understand that, that some people in here are very serious about this. And again, you may just not be ready for that. No slight against you, but don't hurt somebody else's opportunity. And also, again, keep surrounding yourself around great people that are obviously working really hard to kind of, to grow their scenario and grow the people around them. And that's what's going to make you successful, again, in the market. But that's just my opinion. I'm no one special. I'm a newbie at this too. But again, I do realize some things as a somewhat older gentleman that's been around a little bit, been in the military, traveled, own my own businesses, been in corporate America, done it all, been to college, all that, done it all a little bit, and I some of the experiences that I really hold, dear to me is that, man, no matter through all that, the most gratifying aspects of those experiences was the people that was in my, in my journey or along my journey, my path. It's always the great people. It's always the good people. Those people that keep it 100 with you. Y'all know I'm talking about, the people that tell you, hey man, you got a little soldier hanging out your nose right there, and you're in front of, some ladies or a business meeting, and they pull you to the side, with some tact, and they ain't just all, ignorant with it. They pull you to the side, various, hey, family, I got a little soldier, you want to take care of that? I got you. That's the kind of people I'm talking about. Solid people that are serious about, keeping, being on code, so to speak, keeping people, solid. And again, that matters. You guys will realize that for some of you, a lot of the younger guys on, again, man, your peers got to be on point. If not, then you already know what time it is, right? So again, you just got to make sure you guys realize some of those small things like that. I'm as I always say, I'm no one, special and all that, but I do come from a place of realizing that, if you allow dignity and integrity, right, to rule your roost in terms of how you carry yourself, then I guarantee your path to success is going to come a heck of a lot faster than the average person. I guarantee it. Your path to success is going to come a heck of a lot faster than the average person if you allow, again, dignity, integrity, and proper discipline and due diligence to be, some core principles around your life every day. I guarantee you'll be a heck of a lot more successful than your peers, hands down. Because those are the critical things that hold a lot of people back on a daily basis. The reason why they, inculcated with a lot of fear, which we know fear, as y'all always hear, I give my little definition of fear. It's false evidence appearing real. That's all fear is. You didn't talk yourself out of good opportunity, right? And it ain't even, it's not danger, that's fear, right? You just afraid. Again, we all go through that from time to time, but again, you need to learn how to master that and realize you are the author. You are in control. You have more control than you probably give yourself credit for. Because someone that gave you a whole lot of spookism and got you, clammed up, scared to make moves, right? No, that's not living. Again, as anything in life, when there's much risk involved, the reward has to be just as sweet, right? So that's why we understand the values of risk versus reward. In terms as the market, when we're looking at the market, segue right into my commentary in terms about earnings and futures and all this stuff like that, obviously giving a projected outlook about what we want to do in the market, you have to make sure you understand the values of these things, right? And how important it is to relegate that to again, making good decisions based upon solid due diligence, or having a solid think tank around your people that's also helping you come up with a sharp decision. Again, no one gonna be 100% right. Don't get it twisted. I mean, because I see people do that. They'll take a trade or a tip, so to speak, and if the trade go against them, they instantly want to blame who? Right? 9 times out of 10, who they gonna blame? They're gonna blame the so-called person they got the tip from, not themselves, right? Because again, where is your accountability in the process? Or maybe you just not mature enough to realize that, you know, this market is very ambiguous. It can go against you really quick. You could be up, you know, 15% literally, drop something on the floor, bend down to reach it to pick it up, on the way back up, stop and go into your drawer to get you another pen, right, to write down a trade, and as soon as you get your eyes locked back on your screen, you down by 6%. After being up by 16, 15%. And you like, what just happened? Right? And you realize, okay, yeah, this is a, you know, this thing is serious. And we're talking about if you didn't have any hard stops, you know, set in place where you had any hard stops, and the market just reversed on you that quick, literally in seconds. Right? So in these moments, again, you know, how do you protect yourself? How do you protect your backside, you know, or your downside? Right, depending on which way you're going, if you're short the stock, going down, you're going long, you're taking it up. You know, how do you protect yourself? Again, yes, one of I see one brother in the chat, Onion, he said, yeah, learn option to hedge your investment. That's 100% right in terms of the options market. Right, learn how to hedge, how to be equally balanced on both sides, and wherever you feel the most conviction in terms of that trade, in terms of you doing enough of your solid due diligence to make you take that trade, then you go a little extra on that side. Like you hear me. Like I was just posting a trade to a lot of you guys, right? Matter of fact, I'll just share my screen, right? When I was talking about Trivago, right? Some of you guys know this is going to be a big week of earnings. Like last week kicked it off. I mean, the week before that kicked off with the banks, right? On the following Wednesday, right? You had the banks. This past week we had the juggernaut. We had Netflix, all the, you know, them big ones, some of the tech sprinkled in there with banks. And now we're going to get to the nitty gritty, right? I think this particular week right here of earnings, this is the backbone value here. This is where it starts to get real in the field. As this is going to get real in the field, it's about to get real in the field, right? Because I mean, I could throw out about 5 or 6 names already. We talking about the major, you know, players in the S&P in itself, and also the Dow itself, that if you just remove them by itself, the market really is flat without their monetary value. And I mean, Boeing, game over. If Boeing just walks away right now, Dow done. Right? I mean, you got 3M. I mean, there's a lot of big names in there. But we can go on Facebook, Amazon, you know, Google and all. Come on, man. You know, this stuff is serious. You know, in terms of the opportunity, what I'm saying. Right. So if you just think about this guy, let me share my screen real quick here. Some of you guys already seen, you know, you guys already know what's going on in terms of you know, the earning plays. I always try to post them. You guys know how to look this stuff up for yourself. That's why it's important to learn how to also be good at researching. I like to pride myself on being a really good data chasing type of person. I love data. I love chasing data. I love what it entails when you be able to get ahead of the game, like 1 or 2 steps ahead of the game, and you take a trade based upon good data, and then your trade end up going in your favor. It's no better feeling than that. I love setting goals and hitting them. I love that, you know, and that's exciting to me. But again, let me just shut up and let me get to work a little bit, because I don't have much time to be on. Again, I got, you know, a little free time before the family get back in and whatever. But again, you're thinking about some of these earning plays, right? We talk about some of these earning plays. Let me share my screen real quick. Let me share my screen, guys. 1 second here. All right. Let's see. Okay, earnings. All right, so we got earnings, right? So, hold up real quick. All right. Yeah, my wife just hit me up on some. All right, so yeah, if you think about it, right, in terms of, let me set this here. 1 second. All right, guys, there we go. Boom. If you think about it in terms, again, we're talking about, you know, obviously earnings. We're talking about, this is you know, this is Q2 earnings, right? Q2, like this is, you know, the second quarter of the fiscal, you know, the fiscal, obviously. For a lot of these companies, some of them is Q3, depends on where they at. But again, during this time of year, you start thinking about this, the market in seasons perspective, like 4 quarters, basically. Look at it that way, like a basketball and football game. This is my logic going forward here as I see the market from a commonality perspective, right? I'm always loving to dumb the stuff down, right? Your goal is to dumb the market down best you can. I always use the Matrix movie, right? Neo, right? When he realized that he was the one, but before that he was just not sure if he was the one. He was always, doubting himself, and the signs were kept trying to reveal themselves to him. And he kept, no, I'm just not ready. Maybe I'm not the one. All that, again, that's how you are when you trade the market. You're sitting there doubting yourself a lot of time, and you don't realize that, hold up, I may just be, onto something here. Let me give myself enough just due and credit to realize that, I am intelligent enough to kind of make the kind of decisions that'll put me somewhat in the best position to kind of gain some from this, right? So again, when we taking these different trades into earnings and realize this is the most volatile time of any company's particular, aspect throughout their fiscal, is because they're giving what they call a quarterly report on how they're doing with your investment money or somebody else's investment money, whoever, right? If you just coming in to trade it. So then you start saying, okay, well, some of these companies actually, what do? And what are their peak marketing or their M&A values, right? Marketing, advertisement, or merger and acquisition are happening, all right? Or when did they, gain majority of their book value? What periods of the year is this happening for them? And then you start going back and looking at the chart history, right? The 52-week chart history. You backdate 52, 51 weeks from today, and you say, okay, what has the company done since then? Where are they peak, values of earnings coming in, per year over year when they seem to be making the most money? And if there's any kind of deciding factors that may have caused that company to spike during this time and be kind of lackluster during the others. And that's, again, another way to look at the market from a very common sense perspective. Again, as we all know, at the end of the day, this ain't really rocket science. It really isn't. Investing and trading in the market is not rocket science, guys. It really isn't. I can honestly say that. I'm still new at this. It really isn't, right? So what I say is, okay, well, again, you're smart, man. You're smart after reporting. Put 2 and 2 together, right? You ran businesses before. You've been a quarterback. When you had to, your output and the companies were, depending on you to hit your quota. All this, what was those deciding factors, and why did they make you go hard during certain quarters and not hard during all the quarters? All right, because these are so-called peak essence of their earnings that they need to go out there and make sure they go out there and hit or beat or exceed their level of expectation, because they know other big people, investors, are looking at their company, right? So again, just like 100% right, brother, on your head, you own it. Yeah, like cyclical values, right? The cycles of the market, right? And I'm just, throwing out the little insight in terms of how I look at this stuff, guys. And, you guys are asking me, well, what are you seeing? All this and that. So if you take the chart that I have up here before you guys, we'll just start with Monday. All right, we'll just do Monday on. Again, this is hypothetical stuff in terms of natural commonality values, right? And again, you still go do your due diligence, look at the technicals and the fundamentals too. But you take a company, so let's pick a company out of here. Like, we look at this list right here, right? Out of Monday's earnings, right? We know Google got after the bell. Again, we got some big names in Monday alone. If I was to ask each and every one of you guys right now, out of all these companies you see right here, you got Halliburton, Alphabet, which is Google. You got Hughes, TD Ameritrade. You got 1-800-PET, PetMeds, whatever. You got Steel Dynamics, Netgear, Whirlpool, ITW, right? You got Zions Bank Corporation, Lincoln Electric, Crane, Scorpio, OI, EM. You got Webner Enterprises, yeah, Linux, Veritex, right? Brown & Brown, and you got Bank of Hawaii. If I was to ask you guys just a very simple question, out of all those names I just named off to you guys, which one of those companies stand out to you the most? Post it in the back chat. Which one of those companies stand out to you the most, and why? You don't have to, give a dissertation. Just kind of throw a little back in, like, I like this company because of this, or this company is popular because of this. Which one stands out to you guys the most, right? And you realize when you start thinking like that, it's because one or two things hit your mind first. The first company that hit your mind first, or the first thought that came to you first is something that obviously, number one, either you peruse their products and or it's something about that company that's familiar with you to the point where it's on your mind to kind of have you thinking about it, right? It's on your mental radar enough to have you thinking about it enough to make sure, to the point where you may even want to trade or take a position on it, right? Especially now that you're trading it, and engaged in the market, right? And then you say, okay, well, okay, so Family Onion Head says he says Whirlpool, right? Because the Whirlpool is made in China, right? Right. So again, then you say, okay, well, you do like a little back research on Whirlpool, right? Again, he thinks that Whirlpool is made in China. Who knows how they're making this stuff? But for whatever reason, if he liked that company under the mentality that Whirlpool is a solid company for whatever, right? So let me pull up this thing real quick. Hey, just like I said, the future's probably gonna open up flat. Here we go. You see it starting to already show that. We 43 minutes into the futures open up, and it's still early. We get that, but it's flat. These numbers ain't looking too hungry right now. So again, that was just my prediction going into the open up my live stream. I said the market may open up flat a little bit. We'll see. Give it time. But again, it's just too much stuff going on in terms of Trump tariffs, and now you got Iran starting to ramp back up this whole war talk. It's going to get really feel. Again, summertime, y'all know the whole reality. When they get hot, that's when people get they most crazy, so to speak. Right? So it's about to get crazy out here. So let's look up Whirlpool real quick. Let's do this real quick. Excuse me, guys. Let's do this real quick. I don't want to spend too much unnecessary time if I don't have to. All right. So just put it again. Google's our best friend, guys. Google is our best friend, right? And we just put in like Whirlpool company. Go straight to Google, right? And you realize that okay, Google obviously is American-based. Whirlpool is an American-based company, right? They're headquartered in Benton Harbor, Michigan, obviously. So, again, we got an American brand company here. And you realize, okay, then you say, well, is this a company that is, still, doing pretty good in terms of, the sales? Are they selling a lot of Whirlpools? Have you been in any, buildings and or, construction sites where they're actually plugging a lot of Whirlpool-based, items or appliances, all the different things that Whirlpool offers, right? And again, obviously it's no secret, I'm buying another investment property, right? I'm actually closing next week on another investment property. And a lot of the properties that I went and seen, or I was looking at, before I found the one that, we're going to pull the trigger on, when I was looking at a lot of the appliances in the homes, did I see Whirlpool, or did I see GE, or did I see Samsung the most? Right, and we talk about new base appliances and or pretty fairly new homes that got so-called updated appliances in there. And it's weird that we again, it's a lot to think about, but it's just commonality, common sense, right? Because again, it's supply and demand. What you see the most is obviously apparently based upon people buying these products, which obviously putting money in the books, right? And I can tell you unequivocally, I saw more actually GE. Then I saw a good little deal of Whirlpool too, but I saw GE. Obviously, I saw Samsung. A lot of Samsungs catching up a little bit now in that department. So again, from a commonality perspective, I say, well, okay, Whirlpool's still pretty solid company. They do pretty good, and they still around. They may not need to be the complete top dog, but again, they just might be. Who knows, right? And then again, I say, well, let's go see, let's go take a little trip and check out their little, their little back end, right? Let's go check a little bit of the fundamentals, right? And we're just making a little educated guess, so to speak, and just doing some little basic, basic little due diligence here, guys. It's just not even a deep scrub. And I said, okay, where's Whirlpool on this weekly, it's 52-week chart, right? Where is it at on the 52-week chart? Right, and I come straight to the chart here, and I see that it had pretty much a bounce. It had a bounce, pretty much a double bottom off the lows about 145. Right, they had a double bottom at 145, over the past month. Right, and the elite one is Brother T-Bone. You got to get the FinViz elite, but this one here is pretty. It's pretty dead on. FinViz is pretty solid, you know, and because real time is backed up by like 15 minutes, you know, it's 15-minute delay in it, unless you get the elite upgrade to the FinViz elite. But right now that the market is closed over the weekend, you're gonna get the most latest accurate update of where the stock was when it closed Friday. That, you know, that gives you any kind of, you know, indication. Right. So if you look at this chart right here, you guys can see it. I don't know if I need to blow it up or not, but let me know if you can see it pretty decent, guys. If not, I'll zoom in on it. Matter of fact, I'll zoom in a little bit so you guys can get a little bit clearer. And you say, okay, it bounced, right? It had a double, pretty much a dead cat or a double bottom, and it bounced and kind of pulled up from the lows of 145, right? And they had last earnings, which is what the Q1 earnings, basically, right? The value in that was around what, right? You got what, April, around that time frame, right? Around between March and April, right? So since last earnings, what did the asset do? Seemed like they sold off pretty, you know, they had a bad earnings apparently. If you go back and look at it, you can pull up the old, you know, last earnings report and see what they did. And you'd be like, dang, okay. They sold off a little bit here. You see what I'm saying? So apparently, you know, hold on, guys, somebody at my door. I know I didn't order anything. 1 second, guys. All right, hold up. I was like, now I know I didn't order anything. Yeah, that was for you, but you ordered something. All right, cool. So I ordered me some nice little Greek salad. All right, guys, I'm back real quick. Sorry about that, guys. So, okay, 2-1, then 2-2. We got some phone calls coming. I'll get to them. Okay, so real quick. All right, because I don't have much time. All right, so again, Whirlpool, real quick. Just going off the top, we just picked one because, you know, that was the first one came up, Whirlpool, right? So you think about, now let's start putting in some variable values to where Whirlpool's at. Now, looking at the Whirlpool chart right here, would you guys say that Whirlpool is pretty much, since it sold off from its last earning, right? You had a little retracement, right? From when the bottom here hits around about 147. You had what, almost like a V-shaped reversal almost. It kind of pulled back up a little bit, hit 155, hit some resistance there, right? Gap back down for whatever reason. They had some bad news somewhere during that time frame. If you go back and look at their news, you probably find out that somewhere near the end of April, they might have had some bad news, right? That's what caused that gap back down. Your gap back down from 155 and came back down to like about 148, 149, right? So real quick, let's see if we can pull some news. I'm gonna run right over to stock twitch real quick since we're already on it. All right, let's go to Whirlpool. Let's find Whirlpool real quick. Whirlpool, where we at for Monday? Monday after hours, actually. Let's find it. Okay. Let me find them real quick. No worries, I just type it in. All right, so let's go to Whirlpool. All right, so again, somewhere around the end of April, they must have had some bad news caused it to sell off, right? All right, so let's see what they got on the news real quick. Again, this is just some basic due diligence kind of stuff. This is what I do. I do this every day, when I'm trading the market. And people be like, man, how you find this? How you find, man, I'm just, again, so again, end of April, right? Around the beginning of near May, and it's July now, so you got June, July, about near 2 months, right? All right. So what caused that stock to sell off? There you go, right here. Right, about 2 months ago, right? So what did they have that caused the stock to sell off? Whirlpool Corporation announced the preliminary results of a modified Dutch auction tender offer, right? So they had an offering basically, right? At what? 159 a share, including what? 4,676,808 shares that were tendered to be notified as guaranteed delivery, right? And they did a tender to Computer Share Trust Company, and that's basically the depository value that took that offer, right? And they got the par value at $1. And because of that, anytime you see the word offering, what typically happens when you get the word offering, right? Most people start from the sell off, right? And again, the stock sold off. It came from 159, or they gave it the price at 159, but it was trading up near about 156, 157. And because of that offering, again, of that value of shares, the stock pulled back. Ugly sell off, right? So again, all we're doing is learning how to put 2 and 2 together, guys. So with them having this tender offer of recent, this Dutch auction tender offer that this is done, obviously they did that to do what? Get some money up, right? Basically, you're doing offering, you're doing that to get some money up, right? Get some money on the books to do one or two things: mergers and acquisitions, right? And or restructuring the company around to position yourself for what? For growth or growth campaign or to pay off some debt, basically, right? So again, in that moment, boom, that kind of hurt the stock, right? That hurt the stock, right? So since then, okay, what happened? Dividend growth champion now on sale. That's probably something else, but again, let's just do a little quick little research on some news. Anything else out there that's on the news as far as Whirlpool? All right, so I don't see nothing there. Again, it's just a soft scrub, so to speak. Just looking for news, right? Based upon where Whirlpool's at, right? So you got okay, Whirlpool right here. 19 Whirlpool Corporation and Habitat for Humanity renewed commitment through 2018. So obviously they had a commitment of a merger acquisition scenario with Habitat of Humanity, right? So it's a new commitment through 2018 that marks 19-year, applies manufacturing nonprofit organization collaboration to support families in need of affordable housing. So guess what happens in that moment? So every time they build a Habitat of Humanity house, guess who's supplying the house with appliances? Whirlpool. Whirlpool gets first contract deals at any house of humanity to put their their appliances in them, right? So in this scenario or a commitment, it's 18-year partnership. Whirlpool has developed an active program in more than 45 countries with a commitment more than 107 million. Obviously, a lot of that based upon them being able to be the front runner and putting their products in these particular Habitat of Humanity homes. So basically, that's advertising and marketing. It's a tax write-off. And again, now that opens up obviously other contractors and other businesses that want to go in the field of doing those kind of contractor-based type businesses, nonprofits. They're gonna look to Whirlpool to be able to put their products in their home. Again, just basic stuff, guys. Some of you guys already know, just like, yeah, we got it, man. We get it. Some of this stuff elementary. But again, this is learning how to connect the dots in terms of what companies are doing throughout a quarterly span. So if you're not necessarily having a ton of news throughout a quarter, or at least a good amount of news throughout a quarter, then that'll leave an investor to think, okay, well, what is the company doing? I mean, y'all did nothing all last quarter. I mean, we got no press releases. Do y'all know how important it is to get a press release? For some of these companies that really need a press release because they're drowning and the short sellers are killing them, right? The company ain't releasing no news. There's a lot of speculative stuff supposed to be coming out, speculative news supposed to be coming out, and then the short sellers are just piling in, and just weighing the stock down. Right now, you find yourself like, man, you're gonna, again, capitulation sets in for you. You're gonna sell. You'll get up out of there, and right when you sell, guess what happens? The stock reverses, it goes up. Crazy as that is, right? So that's why it's important to realize you gotta be solid in your due diligence. Be it ever so basic, if you like to look at it from that aspect or not, but this is what you do, and this is what we do, guys. If you're serious about it, this is what we do for a living. We chase data and information, and then we backdate it or back it up against what? The fundamentals, right? We see what the fundamentals looking like, or the performance of last week off the stock pulled back 2.55%. Over the month, it's up 4%, and over the quarter, it's only up what? 1.63%, and that's because the following quarter, what happened to it? It sold off. It came from 165, somewhere around that that area up there. Obviously a lot higher than that because obviously of the peak of that quarter, on the back end of Q4, right, which typically gives an earnings report around in February, right, in the January, February time for the for the following quarter, it sold off. Next quarter, guess what it did? It sold off again, right? So they had basically 2 quarters where the stock sold off in earnings. Had a little reverse again on the back end of April after that gap down, it gap back up actually. Pull back a little bit, bounced off 150 again, showed a nice level of support here at 150, and then it took off, it shot up. Stock picked up over $15 in less than maybe about 2 weeks and 3 weeks in the month of May, between month of May and June. That's staggering, guys. Think about that from a long-term investment term, just from a monthly perspective. You picked up $15 a share if you had the patience to sit in Whirlpool around about the first week in May to about near close to the last week in June, excuse me, last week in May. You'd have picked up $15 a share if you bought that stock at 150. Think about that. Let that marinate. You could have bought literally 2 shares, cost you roughly about $300, right? And you just put your money in there, forgot, left it in there, right? You came back, got an alert, the stock hit like 160 and 165. You picked up basically, do the math on that. Again, but I'm just saying it from that perspective of this how we do this. This is what we look for. Right after that, it hit that peak or high level of resistance there at 165, because you see on the chart, you had a level of resistance at 165. It sold off again. So guess what? They must have had some bad news around what? Around the last week in May. Again, go right back over to the chart and realize, okay, man, what happened? What happened? Discover base, Whirlpool wanted washing machine tariffs and it wasn't ready for trade war. That's a little earlier. Facebook Whirlpool. So something happened in that time frame that caused the stock to sell off. So you go look for you do a little more deeper scrub, because you don't see anything right here that shows, from where we're at in June to, July to where it's at the end of June. It happened during the end of May. So roughly about roughly between near 2 months ago, right? So what caused that sell-off? Then that's how you start doing your research. So you can have 3 major sell-offs in this year alone that cause you to believe again that this is why this stock is in trouble, right? Or it sold off to the point where it came all the way down, bounced off this 145 level of support, and now you hear it at 151. You see what I'm saying? So again, this is just some of the basic stuff I'll be talking about, guys, in terms of when we talk about due diligence. This is why this stuff is important to realize. Don't just buy it because someone's saying buy it because it's at a certain level of it's here. Go back and look at that chart history. Go back and look at their news, right? Go back and look at the things that say, or give you some insight why this would be a probably a good buy right here if you're looking to take it long, or if you're looking to play it into earnings, right? A couple of things stand out already when you look at it from just a natural obvious bit. The stock, is oversold, right? It's oversold a little bit here, in terms of where it came from a year ago. 190, it's down to 145. You know what I'm saying? That's a good chunk of percentage of the money law, almost all the old 0.25%, or 25% value decrease. You know what I'm saying? Actually a little more than that in terms of its overall aspect, but that's a major sell. And then now you got a tight channel here that is starting to consolidate in. And if there's any value that they may have a strong level of earnings, right, or the numbers might be pretty decent, then you may break out this resistance point of what, 155. Then it's game on, right? Then it's game on. You got all this upside. Your next major level resistance about 158. It passed that 160, obviously whole dollar mark, and then all the way back up to 165. All right, fill that gap, close that gap back. Right, that gap is the 165. You want to get back to 165. Right, then you say, well, okay, well, real quick, let me double down even more. Let me go check the option flow chain. Let's see what any kind of investors doing in terms of the options market, right? Let's go see what the option traders are doing. I can go over to barchart.com. That's a good site to look at, guys. And I'll start posting them and stuff in the Discord room or the description box too, what to look for, like different websites you can check out. Like Barchart is a good one for options. Obviously, you can go to Yahoo. Everybody got their own place that they like, but again, I just do like a quick little search real quick, and I'll be in and out. Right, so let's see what the option market. Let's see if anybody posted anything in the option market in terms of where is that going into earnings. Right, let's see if they got any news in the short-term interim, considering where the options market is looking at it. All right, and I'm just doing like again. I'm just using stock tools. I'm not even going to none of the other ones. I'm just doing like what they call a soft search, a quick little soft search. You got people giving an understand saying they got to send shooting star candlestick plus 3 more alerts on the stock. The shorts are still hovering in at a pretty decent amount at 34% as of 7:20. Right. I don't see anything on this side right here. I can probably go check it on bar chart, whatever the case. So again, just no worries. Just go right over here, go to bar chart. bar chart option volume. We just go bar chart options, right? Highest IV. I got myself for highest IV. That's why I went straight to the IV, right? Highest IV type stocks are stocks that, you know, loaded in implied volatility. I mean, there's a lot of calls and puts going into that asset for a particular, you know, strike price or whatever the case, or duration time, where it's going to cause a lot of good turnover in that option in terms of the stock movement, be it go up or down. So you can get some good gains off that stock, obviously, if it moves in a perspective where, you know, it hits your strike price, right? So it's good to kind of find stocks that have a pretty good, decent amount, decent level of, good IV value or good open interest. Open interest is good too, because again, that's a lot of contracts going into that asset. All right. So real quick, this is as of Friday. This is as of Friday. So let's see if Whirlpool is on here. Let's see if Whirlpool got any kind of high level of interest value. I don't see the thing on the front page because I think, did I have mine set in terms of no, I didn't set it. Let's set it at the highest IV basically. All right. So Fitbit got the highest IV as of Friday. They got the $6.07 price value. They got the puts, right? The $7 strike value. And they got an interest value of 1,247. Goodness, they got a lot of interest in that stock. Right? It may be seen because, you know, they just had their earnings, right? They just had earnings. So let's check Whirlpool again. You using Whirlpool as the catalyst for this moment. Let's check Whirlpool. Let's see where they at. All right. So again, going through. Let's see where we at. Let's see where we at. All right. So performance over the past month, it stands up by 5.9%. 3 months on the 2%. Over the 52-week, it's down 37.9, which we just saw that. Right. So Whirlpool range, corporations. Let's see if there's anything relevant in there to kind of pay attention to. Look at shares Whirlpool Corp to potentially pull back after yesterday's 1.52% rise. Again, so this is all Friday news. Just a ton of news coming out of Friday, right? So let's see. Let's go look at the options. All right, let's go look at the options on Whirlpool. All right, so you got okay. So look at here, guys. Look at this IV here, guys. The IV for Whirlpool coming out of going into Friday's expiration, meaning this week, but coming out of last Friday, you have an IV of 68.19%, and they got the strike price of 141 in terms of the calls. All right, this is just if you just sell the calls here, I believe. This is sell the calls perspective, right? At the 141 strike, and they got that, you know, obviously a good level of interest in that value, IV into that interest. Now the puts, right, for the obviously that's if you shorten it, right? If you shorten it, we know those are as puts, right? You got another high value of IV at 61.14%, right? At the 141 strike price, right? At the 140, and it ended obviously if you bought it on Friday, it was at 72. It was at 0.72, which that's how you know when you buy out, you buying like a cent value. So you'll be buying it at 72 cents, right? As opposed to $1.41. Oh God. I got it. Just go ahead. All right. So again, in that moment, it's been like I was saying, guys, we're gonna get a little noise. So you guys gotta forgive me here. But what I'll do, I'll continue it. I maybe get a chance to come back on a little later because I don't want to omit the little guy from being able to run around because obviously he has to have his space. Because I was getting ready to go in a little bit here, but we'll find more time to do this. But again, just real quick on Whirlpool, since we got a chance to get this one in, there's a high level of puts that's coming in for the asset, going into earnings for this week's expiration date, right? And if you come down and look at the calls in terms of where it's at, where the stock is at, all right, we know the stock is sitting basically, roughly about 151, right? So you look at everything above 151 in terms on the call side here, and you're looking for what, where they at, where are the, if there any kind of big open interest here, right? If there's any kind of big, buyers sitting in for this earnings for next week, this week's expiration value on the 27th, right? So you got some 152 strikes, right? You got those are unchanged in terms from since the last week. You got an implied volatility there about 60%, right? 78 contract values there, right? Open interest about 54 of them. The 155 calls, right? You got 155 of them there, right? In terms of volume, when you talk about option guys, the volume is like different. How many contracts are bought at that particular price strike, right? And the open interest values are those that are out there still, that are just waiting to be fulfilled, right? So you got a few of them in there, and some pretty good, implied volatility in that aspect of calls that are people looking to probably, get that, get some movement on this earnings, right? Going into the expiration of this Friday. Then you come down to the puts again, the same reality. You checking, where they're in terms of those puts, right? Where are the top? You look at the puts, you start at what? At those levels where where the stock is literally trading at now, right? It's at about 150, 151. So right here, this area here, right? The 150 unless you want to buy, out of the money a little bit, the puts on it, saying to get a higher, we're gonna pay more for it. But again, all the downside, if it goes your way, you're gonna really benefit from it, right? So one second, guys. All right, real quick, guys. Sorry about that. So real quick, in that moment, you're looking at the interest here and saying, okay, well, if I buy the puts here at the 150 level, right, going into the earnings, right, depending on how the stock may, perform tomorrow when the market opens up, you may can get in at a good price. So right now, those are, $3.15 for that contract for the options, right? If you buy here, right, at this expiration date, meaning this Friday. Right, a little pricey, right? Cost you a little bit there. All right, but again, that opportunity, if you catch it, if you obviously, catch it at the right peak, you may get that little, that price a little cheaper. That's why I always kind of wait. Even you buy your option the same when you buy a stock, basically, right? If you want to take it short, you want to buy the stock when it's at what? At its peak, right? When the stock is spiking up and hit a level of resistance, because now you can get it at a what? At a better price. If you go in the opposite direction, you want to buy it what? On the dip, right? On the bottom, on the bottom, so to speak, right? So again, you can buy it just because you're gonna take it in Friday anyway, but still you want to get the best bang for your buck. You just want to buy just because it's cool to buy at this point. No, buy at the most, highest level of what? Opportunity, or the most highest, aspect of return rate, right? And then in that moment, you're looking to kind of make sure that, obviously under the conditions, the stock or the asset goes in your favor in that regard. All right, so real quick, let's look at some of those prices. So if you're looking at right now, again, the 150s, right? The 150, if you buy, let's say the puts here, let's see where we're at. So right now it's at 150, right? The stock's trading around about 150, right? So if you was to buy, the puts on this thing right now, one contract costs about $338, right? Pretty pricey, right? And again, you see the implied volatility there and the volume value in there. That's why the price of this stock is so high too, because of the fact that, it's going into earnings. There's a lot of people kind of shaking for it a little bit. There's other companies out there that got high IVs that we get it, and I'm not saying I'm some guru at options because I'm still learning too, but I'm going to bring some people on that's going to really, really take this stuff to the next level. So get excited for that. The people that really, really trading options like none other. And they can really, really, take it a little further, even delve into the Greeks a little bit, break that stuff down to you, and so you can have a little more understanding. But again, I'm just using common knowledge here, guys. This is based a lot of this is common knowledge of what I've learned thus far in the market, and I'm just trying to show you some different, more layman term ways to kind of look at this stuff, right? So again, those contracts again will be pretty expensive if you buy at this point here. If you just buy, the 150 puts, and that's if you just buy it to kind of be right in the money. That's an in the money kind of scenario because right now it's sitting right around that price. Now then, when you start buying, a little further out, because the stock has earnings, and if you thinking the stock going to drop on its earnings, then you can start looking at the 149 puts, the 148 puts, the 147 puts, right? So that means if the stock going to drop, at least 3 or 4 or 5%, that's a good little amount, right? You can do 3% of $150. You can get do the math on that. You can see how much stock going to drop. right? You know, and you could, that could be like a little quick little, 3% of $15 basically, right? What's the math on that? You know, you could, that's how you'll do that stuff real fast in here in terms of the drop. You know, you talk about $4 or $5 drop, okay, I could deal with that, in that regard, you know what I'm saying? Or 20, $30 drop, okay, I could deal with that in this regard. However you're doing. So that's how you start to realize, where you at in terms of your particular, strike value that the stock can reach your strike price. If that makes sense in terms of it drop this low, it can hit your strike price, because this is the implied move that the market is saying is going to drop. And this is why I'm going to set my target price at this interval as opposed to, way up there like 150 and pound is high ridiculous price for it. Right. So the 146 puts, you got the 147 puts, again, those about $224 to $192. So again, I'm just trying to, again, put some small little context to it. We know that it has a major level of support at what? 145. So if they do miss on earnings, right, and let's say if it breaks this 150 level here, the first level of support to 150, then we know that it could very well much easily get down to what? 145, right? Because it showed that, it's a lot of people that was buying and accumulating around that 145 level, even a little under that. But as we know, whole dollar marks become a natural level of what? Support or resistance anytime you buy an asset to kind of reach or breach a certain aspect of the of movement out of the trend. So again, in that moment, I'm looking, at the 147s, right? I'm looking at those 146s, right? I'm looking at the 148s. I'm looking for something written in that channel about what, $4 or $5, right? Because again, once it hits those levels and the stock keeps dropping further under that, man, that's a lot of upside. That's a lot of good percentage gain in that moment. You know what I'm saying? Now you hit your money, you pass your break even aspect, and you just rolling in the percentages now. Right? The same way I killed Fastenal. You guys saw how I played Fastenal, the company Fast. I crushed that stock in the earnings. I made good money on that. My latest two victims were eBay and Alcoa, aluminum company. Right? Alcoa and then eBay. We know eBay is left for dead because Amazon killing this market share. And then they lost the contract with PayPal. That messed them up big time. That's why I knew I was going to short the brakes off eBay. And a lot of people going along. I'm like, no, this eBay, man, last time you even use eBay. Who even talks about eBay these days? And our core dealing with what? Tariffs issues. So some of this stuff was just common sense before I even really dug into the technicals and fundamentals. That's why I say as a consumer, we have an added advantage. We see these products every day. We see, if they've been marketed and advertised, we see that they're probably not. We see that they're, no one is talking good about the company. Then you start getting paralleling that to, the fundamentals and the technicals and the charts and all that. Again, just some basic, basic stuff. But again, it may be basic to me, but I'm just giving you a figurative value about some of the things that I look at, in terms of how I go about, setting myself up for, potential play, right? And again, I get excited, for that moment, because here's a good opportunity here to capitalize, on, another company's what? Greed or downfall, right? And that's just part of the game. That's why I say it's not personal. It's all about the bag. So again, we're looking at, Whirlpool, and you're seeing where it's at. It's obviously oversold, but again, from a news perspective, are they, doing any good M&A right now? They got some good merger acquisitions going on right now to kind of float them into this earning. And if you think about Netflix as a whole, Whirlpool as a whole right now, what will be a deciding factor in their stock? Probably tariffs. It probably tariffs. Because again, them washing machines and whatever, they made with what? Steel-based items, iron and steel and tin and aluminum, basically metal. So again, you go to some news right here. Look here. See right here, look at all this news coming out right here on Whirlpool. Monday, you got what? Can Whirlpool reverse its dismal earnings trend, right? In the Q2, right? They know the stock is what? Been beat up over the last two earnings, right? It's in trouble. Now, the next following news on the 17th, on that Tuesday, Whirlpool Corporation to announce second quarter results. Again, whole conference on 24. They just announced that they're gonna have earnings. They filed a little AK for them, right? Then you got Whirlpool find tariffs a double-edged sword. Yesterday's Wall Street Journal includes, excuse me, an article that shows just how complicated tariffs can be and significant disruption they can cause of an industry. Obviously, Whirlpool was an early proponent of what? Of tariff, right? So again, in that moment, you know, you think about, you know, however, since that time, Whirlpool has faced a series of challenges. Subsequent tariffs imposed on aluminum and steel, essential raw materials, and manufactured clothes and washers, have offset the initial benefits that Whirlpool and Ayers GE Appliances division experienced following the tariff on clothes washers, coupled with softening U.S. demand through what, the first half of 2018. We saw that because guess what was happening during the first half of 2018 up until this quarter here? Whirlpool was selling off. So wasn't a lot of people buying washing machines. You know, wasn't a lot of people buying washing machines and dryers, apparently, or not Whirlpool, that is. And remember I was talking about when I was going looking at the different properties, and I'm looking in there like what kind of appliances in there. I saw a lot of GE. I saw a lot of Samsung, and I'm like, okay, Whirlpool used to be the company. What happened? You know, they still are, you know, in a lot of ways, but they got a lot of competitors, basically what I'm saying. And now they got tariffs, you know, over them right now. You know, which hurting their sales, right? Because the price, you know, is a little bit more pricier to get their materials, to make their products, to keep the price at a point where, you know, their margin value in play, where they can still compete with their competitors, especially if their stuff not flying off the shelf, right? And as it says here, tariffs are just one piece of the larger puzzle that will impact U.S. demand for clothes washers. That's the dagger right there. That's the dagger right there. That's what, you know, you sift through all this here to get to the nuts and bolts. That little part right there, as projected in the Freedonian Group's clothes and washers dryers in the U.S. industry study, right? This is the company that does study on, you know, on washer dryers and clothes washers, whatever, right? To see if they're kind of performing, you know, at a sort of at an industry level, are they moving or they're not. It says, you know, very, 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 you know, lucidly that tariffs are just one piece of the much larger puzzle that will impact U.S. demand for clothes washing. The U.S. will enjoy 5 years of steady demand gain as the nation recovers from the Great Recession. However, according to Freedonian Act, Kyle Peters, clothes washer sales are expected to increase less than 1% annually between 2017 and 2022. That means they are not growing. They're only going to increase less than 1%, increase less than 1% annually between 2017 and 2022. Challenges arise. The U.S. imposed tariffs will definitely be a factor in slowing sales as we're rising appliance prices and an expected slowdown in replacement activity. What does that tell you guys? What does that tell you guys? Just from that little aspect alone, we just went through it. I know it seemed like a lot, but this is what it takes to be solid at this stuff. This is why you got to go hard, right? What does that tell you guys? Does that say that Whirlpool is in a position now where it can really, get itself going in the right direction, and there's a lot of growth, right? There's a lot of foreseeable potential in the future, in the near future for Whirlpool right now? Or does that say that Whirlpool is in a very, very tight spot right now? Right? So real quick, for you guys that's paying attention right now, press 1 if you think Whirlpool is in a good position to have a very, very solid earnings value going into the rest of this year. Press 2 if you think they're going to be in a lot of trouble going forward in the rest of this, the fiscal 2018. If you think they're going to come into some problems with these tariffs, right, it's not going to affect their sales going into the rest of 2018, press 2. If you think it's not going to be a factor and they still going to be able to be pretty solid, press 1. Right? So, again, see, that's common sense. You guys are using, a little bit of your own, common sense to say, well, okay, hey, I think it may do this, I think it may do that, right? Again, upon further review, you will have your own ability to say, this is why I think this asset is going to move this way. This is why I think this asset is going to move that way. Does that make sense a little bit, guys? Is it kind of making sense a little bit? Right? Again, you don't have to be a guru at understanding how to read fundamentals. PE ratio, EBITDA, price to margin equity ratio, gap earnings, comp sales, all that stuff. That's when you take it a little bit further, right? In understanding the fundamentals to all that level, where it's at from a performance perspective. We just went over that a little bit. Where the performance level, how it's been over the last 52 weeks. Look where it's at over in terms of the year, performance over the year so far. It's down 20%, right? Since the entire year to date, it's down pretty ugly. Coming from again up there near 190, right, on this long wick right here, right? A lot of undecided buyers there between 186 to 190. That's why you got that long wick. But either way, the price went up there, shot above 190. And now, again, it's back down here, bouncing off this double bottom here of 145. Again, from a technical aspect, without a catalyst like an earnings, that will show that it's a what? It's a buy signal, which it was. They bought that double bottom, and investors benefited from 145 up to 155. They picked up $10 a share, literally in the month of July alone. Guys, it's just what? The 20th? 21st right now. So basically in 20 days, a person picked up, $10 a share in their investment. Less than that, because again, you look at it where the chart is at right here, they hit that probably about mid-month, maybe about last week, it hit like 155 and hit a level. I was a big level of resistance right there, 155. And they saw that resistance happening there, and the stock couldn't push past that no more than 156, 155, 150, 155.50. And they say, okay, that's a major level of resistance right there. And they got earnings coming up. I'm going to take my profits right here. And that's what investors start doing. They start taking profit right there. Guess what happened? Sell off, came back down. It lost about $5. Some people say, I'm not going to sit around waiting for earnings. Most people don't. They take their profit. They saw that big level of resistance there. It couldn't push through. Let me take my profits right here. That's just reading a chart. That's all it is, guys. Understanding your resistance levels, right? If you go back, over a month before that, right, in June, it hit a level of resistance again around what? 155. Look right there. I mean, it's literally right there, right? Again, that's why this stuff is important to understand how to chart support resistance, because you realize in that moment, you can have a good channel level where you can realize why, what's important to pay attention to. What am my downside here? What's my upside here? Where do I set my stop loss, right? What's my target, percentage gain I'm looking for here? What's my target price I'm looking for? And that's how you trade it. And again, all along 155, you see some major levels of resistance and also a little bottom level support at one point here. It bounced off, shot above it, came back down to 155, support there. Then it finally broke that support, came under it, tapped 150, shot back up to 165. That was a good move right there when it came down and broke that support there. It came and hit that 150. If you bought in there, like first week in May, and you wrote that baby all the way to 165, that was your buy right there. So again, that's it, guys. You guys on it, right? So I see my brother T-Bone asking, what's a good place for news releases? Again, you can go to NASDAQ.com. NASDAQ is loaded with very optimal based news. So you're going to get some good solid news with them. Not so much as just kind of what they call analyst fluff, or third party kind of third party type fluff. They're pretty solid over there at NASDAQ. So they're pretty notable, trustworthy. But you can go right over to NASDAQ. Excuse me. Let me go over to NASDAQ.com, guys. And you can see what I'm talking about here. You go over to NASDAQ. Right. We just looked at bar chart. Bar chart is another good one. That's why I was using bar chart, because they have, information, intel. They're really good at giving you good information when it comes to the options market. All right. So let's go to Whirlpool. We're going over to NASDAQ.com. And guys, you guys should have a lot of these websites like this bookmark too. If you don't already have them, you should have these bookmarked. Right? Yeah, definitely. You can go over there and look at the SEC filings. Right? Again, go look if they up the speed here. Right? Go see if they up the speed here. Right? Again, NASDAQ gives you a little bit more, intricate detail. Again, you're talking about option market. You're talking about the beta. You're talking about the Greeks, right? The theta, the gamma. You're talking about the things that matter in terms of where the stock is at, especially going into earnings. PE to ratio 39.43. That's where it normally should, from an equitable standpoint, should be trading around roughly about $39 a share, right? Price to equity ratio value. In terms of its value per every share, basically what I'm saying. Not that we traded that, but that's, you know, the value in that in terms of the PE ratio. And you got to go look at what that means. When people say, well, what is PE ratio? Right? You know, you're getting ahead of me a little bit. And again, you just go right over this. I love Google. Google is your best friend if you want to be an investor trader, right? So you go on to Google, right? Right click that thing, or left click, or right click that thing, copy, and go right over to Google. Say, what is PE? PE ratio is one of the most widely used tools for stock selection, right? It's calculated by dividing the current market price, of the stock by its earnings per share, and shows the sum of money you are ready to pay for each rupee worth, right, of the earnings of the company. Like I said, so every one value of that share value, again, for the shares they have outstanding for that, you know, for that price value. Again, you can go over to, you know, Investopedia. Again, should have Investopedia also what? Bookmark, and give you a whole tutorial class about price to equity ratio. And this literally how you gonna learn. You can teach yourself this. You don't have, again, I ain't knocking nobody and down nobody, but you shouldn't have to pay tens of thousands of dollars to somebody to sit, you know, in their so-called little back chat room, and for you to learn some of this stuff that you can pretty much learn on your own, right? Mentoring is something different, but to have a so-called teacher that's going to devote a lot of attention to you, and you paying them tens of thousands of dollars, and they got other people to worry about, and they're not going to pay you, you know, pay the type of attention that, you know, that, you know, your money is warranted. Then, you know, I don't, you know, you can do this on your own. Just truth be told. So real quick, let's see what they're talking about in terms of what PE means, right? Again, even happy. That's why I love Investopedia. I love using Investopedia.
The PE ratio is used to determine how much investors are willing to pay for a stock relative to the company's earnings. It's calculated by taking the current price of a stock and dividing it by the company's earnings per share, or EPS. Ken wants to buy stock. Al's Ice Cream and Bob's Frozen Snacks both trade for $18. Al's EPS for the year was $2. Al's PE ratio is 9. Bob's has an EPS of $6. Bob's PE ratio is 3. If Ken buys Al's, he pays $9 for every $1 of earnings. If he buys Bob's, he only pays $3 for every $1 of earnings. Using the PE ratio, Ken decides to invest in Bob's Frozen Snacks because he pays less for the same amount of earnings. A PE ratio is useful for comparing companies that operate in the same industry. Some industries, like technology, have very high PE ratios on average. Some, like public utilities, have very low PE ratios. But no single ratio can tell the whole story. One of the many metrics that investors use to evaluate a stock.
Just like that, guys.
I like the brand. I like the core values that our company's built on.
So
I think
again, in that moment, guys,
Paul Davis himself,
let me stop
the core values that he built the business on.
All right, just cut it off. Yeah. Again, that's, you know, this how you become astute to learning, become proficient at, you know, rounding yourself off properly and learning this craft, right? This is why this is why you go hard. This is why you want to be the best you at this, because I mean, again, we can always get someone could throw you a play. Anyone can throw you a play, but can you learn how to go fish for yourself when nobody else is around? Can you take, obviously work really hard, build you some, some finances up, take you a vacation, right? Go anywhere on this planet where you want. Take your laptop with you, as long as you get that Wi-Fi signal. Y'all know my criteria: laptop, cell phone, Wi-Fi, computer, right? Whatever, initial capital, some knowledge, and you set for life. Because you can do this anywhere around the world, right? You take this knowledge set, you in Indonesia, you took your trip to Indonesia, you out there on the beach, chilling, right? The U.S. market opens up at, you do the time difference, you wake up to trade the financial markets, right? Because you can easily get to a bag because you understand, the parameters, learn how to use this market at your benefit. You on vacation, paying for your vacation through the stock market, trading. I need to make $1,000 a day because that's going to pay for my, excursion downtown, Indonesia tonight. Who paying for it? Bag holders. Somebody else's, misfortune going to pay for my opportunity. I know it sounds pretty, ugly to say that, but that's the game. You know, that's the understanding the value of investing. It'd be no different if you were working for a company. Again, we're just talking about Whirlpool. They in trouble a little bit because they got these tariffs, looming over their head. Right? For the rest of this fiscal year, they got to, really turn out some hardcore sales and do some real serious merger, M&A to kind of still stay afloat. And they got competitors to worry about. And they have competitors to worry about. Right? So the people that are long-term investing in Whirlpool because they just, I've been using Whirlpool for a long time. I just love me some Whirlpool. I ain't gonna never leave them. I don't care if the stock sell off a little bit. That's fine. Again, it's a long-term investment anyway. So again, in that moment, you're just coming in and borrowing their money from them that they're losing on the pullbacks because you're shorting into their bad books or their bad, PR value that's causing them not to grow their company right now. That's true story. That's all it is. All right. So when you shorten into their losses and they're averaging down, right? They find the bounces of so many levels of support, they add more money to their portfolio in that moment. You average down. You're just washing and washing shares out, washing money out, so to speak. Right? You're 100% right, family Alabama country, you can't trade with emotions. Right? As I always say, psychology is your best weapon in trading. A strong mental disposition, a strong psychology is the best thing in trading. People always ask me, what's the secret? What's been working for you, bro? A solid, strong psychology. True story. I got notes around my desk every single day to remind me of that. I'm not just saying that. Again, if I show you here, this is under my computer. I have it taped underneath the bottom of my computer screen every day. Right? You see my notes there. I know it's going to come backwards to you guys. It'll fix it, obviously. But you see there, what does that say? Risk management. Psychology is the best thing in trading. Right? Because I understand you got to have a strong mind to be able to do this stuff effectively. And or enough comfort in terms of when you're taking a trade that if you're not convicted in a strong percentage to take that trade, then don't take it. Because y'all know I have this thing where I say, you got to ask yourself 4 basic questions every single time before you pull the trigger on a trade. What, why, when, and where. I repeat that. What, why, when, and where. If you cannot answer at least 3 of those questions out of those 4, do not take that trade. And the 2 most important ones, obviously, is what and why. In terms of finding it, but then what's most important about when and where. Right? Meaning, because if the stock is oversold, right? Again, that may be a good opportunity, right? But if it's overbought and they may have, the last catalyst came, let's say a couple weeks ago, and this sector that the stock is probably trading in is getting beat up, even though this company here might still make me doing pretty decent, they may be affected by the other companies that's going to drag it down. How many times we've seen the market get dragged down because one big company in the Dow or the S&P, right, sells off for whatever kind of weird reason. CEO flirting with women, CEO get ousted, Papa John, whatever, they ain't that big, but they are, racial slurs, Starbucks incident, and come on. Any given day this can happen. The company might have been on a good trajectory. All of a sudden, here comes some scandal. You might have been killing it too, man. I'm up, like 30% in this stock, man. I'm killing it. I've been buying the dips and selling on the rips. This company, and holding a little bit to take it higher. And then all of a sudden, some scandal rocks the company out of the blue. Shareholders decimated. And we're talking about all the new buyers that just came in. I mean, they were buying it up at the top. They came in. Oh man, what happened, man? It sucks, man. The company trash. See, that's when the company become trash. Now reality sets in. Before that, man, this company is the best, bro. Man, my company is the best, bro. I don't know what you're talking about. They all emotional about these companies. Like, what? I don't care about none of these companies. All of them pump and dumps to me. Every company out there is a pump and dump to me. Facebook, pump and dump. Amazon, pump and dump. Apple, pump and dump. Google, pump and dump. Netflix, pump and dump. NVIDIA, pump and dump. AMD, pump and dump. All of them pump and dumps to me. You ain't finna convince me otherwise. Do you think these CEOs really care about you and your little maybe $1,000, $2,000 here, 10,000, whatever. Come on, man, they got millions and billions flowing into these companies daily. Their main audience is institutional holders, people that come, hedge funds, people that come in with, you know, millions of dollars in terms of investment, because they know that's what really moves. I add a little bit to our little pot and it helps, okay, here and there. But again, in the day, come on, man, you're dying holding up $1 in their mind. So that's why I say don't get all, you know, emotional. Just like the brother Alabama Country was saying, don't get all emotional about this stuff or about these companies. You know, we love talking about a company pump and dump. Yeah, we know it's a pump and dump, but is it moving? Is it liquid? Is it getting to the bag right now? Is it current up to its filings to the point where we know it's not going to get a T12 halt? If all those things check out, then game on. You know, if you trade under that auspice, that's not to say that everybody need to trade like that. Again, it's about discipline. What works for you? Trade within the confines of your comfort level. Do not go outside your comfort level if you're not ready for that. Simple as that. Stay in your lane. Trust the process. It's going to reveal itself eventually. You guys got to realize this. As long as you keep doing the same thing, you know, in terms of focusing on what you're doing and homing in on your craft every single day and studying and being honest and true to the process, you're going to get better by default. Let that marinate. This is not like going to med school or going to law school where you know you got to be on top of your game every single day, right? Or you going, you know, going to the IT world. I came out of the IT world school where you got to be on top of your game every day. This stuff turns over every 2 years. Old information goes obsolete quick. You got to be refreshed for the next stuff coming down the pipeline. You got to stay on top of your grind. This ain't that kind of party. In some ways, I'm saying, because a lot of this is just about experience, right? Patterns. You're looking to recognize patterns here. The market is built around a lot of patterns. That's why you study different patterns to kind of see what stocks are at and realize when there are buying and selling opportunities. But with this, these companies that's been around for a long time, all our Whirlpool, Kraft Heinz, Ford, some of the older legacy companies, and they ain't even growth stocks anymore. They hit a level of their cap, and the only thing they can do now is offer you a big dividend because they're never going to grow to compete with the new emerging market companies, emerging companies or emerging markets that are out there that's starting to develop now, going into the future. Now, you take a company like Ford Motor Company. How long Ford Motor Company been around? Since, like, you know, since dust, literally. And Ford stock is trading at how much a share? How much is the price of Ford trade per share? You know, for its company, and it's been trading, and it's been around for how long? How long has Ford been in business? You see what I'm saying? And you be like, what? Only $10.56 a share? Man, Ford been around forever, and they hit a point where they hit their growth, and then they've been stagnant ever since. They can't grow anymore. You know, again, they got a new, opportunity in terms of, you know, these electric cars, because again, you know, Tesla kind of pushing the bar there a little bit, but ultimately, you know, looking at Ford, you know, it ain't going anywhere, right? It's not going anywhere, right? It's stuck, you know. So again, when Ford rebranded itself and came back out, you know, in the 90s, because nobody started to rebrand themselves. So let's go back. Let's say, I mean, you can go back and pull up the information, like when the Ford go public and all that. You can go all that. But anyway, Ford came from, like, even back in, like I said, early 2000. Early 2000, Ford was trading at $32 a share, $33 a share, right? It hit a low around about $3 and some change. In 2009, obviously, you know, when the market, you know, sold off, obviously, you know, you had a market crash. 2008, right? So we invented Ford. Brother Sean said he invented Ford. Hey, there you go. All right. I know yet. Right. So right there when the market crashed in 2008, 2009, Ford came from all over $32 a share, and it came down to $3 and some change. Let that marinate. So literally from, if you start shorting this stock back in 1999, 2000, and you held your short, man, there been some crazy fees, right? Right? All the way down into 2008 when the market crashed, right? This recent crash. Hey, man, bruh. But again, that's the market. That's why I love this stuff. Again, this opportunity in a given moment. You know, and so this is why, you know, again, I know I kind of get hysterical at this. Y'all know there's a method to my madness and how I go about doing this. That's just how I am. I get passionate about this stuff. And that's the passion that you need. That's the kind of emotion you need, not the emotional attachment to these companies, all this foolishness. No, you need to be passionate about wanting to be on top of your game to the point where you know, like, man, I'm going to get this bag. Like, ain't nothing going to stop me from getting this bag. That should be your mentality. And then you should say, what are my steps or what's my methodology I'm going to have to, undergo to be able to put myself in the best position or the most optimal level to reap the benefit of the reward. I know my risk is this, right? I want to stay within this factor of risk, right? But my reward could be immense if I obviously put myself in the right position. And again, so that's why it's important to realize that trust me, you got enough time to get this, guys. Do not rush your process. You're only going to get better by default. By default, you're going to get better because, again, it's familiarity. It's like get on the bicycle again till you get it. You're going to fall a few times, skin your knee up. You're going to get back on. Eventually, you're going to get it right. Because physics and natural instinct, that your innate ability of your natural intelligence is going to kick in at some point, and your body going to adjust to the balance that you need to stay on top of that thing upright, and then pedal and invest. That's what's going to happen in the stock market if you take it serious enough to kind of really get better at this stuff day in and day out. I guarantee it. I guarantee it. And as I always say, your goal is to realize that you are the boss of your life. You are the king of your castle. You are the queen of your castle. Your end goal is, if you are under the ball and chain mentality now, because we all came from that, kind of slave disposition. Go to school, get a good education. You can get a what? Good, just over broke or just over barely, a good job, right? Wrong. That's the most old, antiquated, stupidest thing you could ever tell somebody in this day and age. When these people making billions of dollars, millions of dollars, millionaires are being born literally overnight, under just understanding how to use some basic know-how, build your following up, build your brand, and then launch yourself, and you can make millions of dollars literally overnight. You could be sleeping on the mattress on Skid Row Tuesday. By Thursday morning, you signed the contract for millions of dollars. Because when you was on that mattress, you still had enough what? Dignity and integrity to keep yourself what? Looking for ways to be successful, even though at that moment your pockets weren't right. Your situation was messed up. But you said, I still got this idea. I still got this vision. I still have a goals. Eventually it's gonna work. Boom. Someone discovers it. Boom, there you go. You millionaire overnight. Like the notorious big. I went from Ashley to classy, literally overnight. And the only industry that offers such an impact value to you being able to grow so fast is either through the real estate market or through what? The stock market. In the discussion, hands down. If you weren't born with trusts and silver spoons and all this stuff, then the only way you're going to come into income at this level, at this speed value, is through the stock market or through real estate game. There's nothing else out there that can offer you this at the rate that you can get to the bag a lot faster, hands down. That's why I always tell people it's the best online business ever. Investor, trader, best online business ever. Guarantee it. But again, yeah, everybody got, they have their own value. They have their own, understanding. Whatever works for you, that's fine. But I know that this is going to be a great opportunity for many of you guys, because I know that your intent is to really put yourself in a position where you don't have to worry about doing, being under somebody else's boot for the rest of your life, right? To be able to fire your boss, as y'all always hear me say that. The goal is to learn how to fire your boss. The goal is to learn how to fire your boss. Right? You want to go into, you're just over broke one day, just over barely one day, or even if you make a six-figure income, you're still, if you ain't getting no pay raise, every year you actually losing money because the cost of living goes up. Right? So again, at the end of the day, you're not there to be somebody else's, catalyst for, to be the best at all they can be. Right? No, that's, like the motto of the Army, be all you can be. It says be all you could be. It doesn't say go out and be the best all that the company needs you to be. It says be all you can be in your own lane, under your own, governance. You know what I'm saying? So again, realize this, guys. You guys are in power, man. You guys got power. I mean, you guys got power, man, more than you think. So again, I know I was kind of, on topic, off topic, but that's how I am. Again, my mind be moving like 1,000,000 miles an hour, guys. I'm not kidding. And I'll be thinking about all these different things, and I'm like, yes, yep, see, yep, this how, again, when you hungry and you humbled at the same time, as that's one of my mottos. Y'all guys know my motto, humble and hungry, one of them. You realize that, that's the balance you need. That's the balance you need. You need to be comfortable, but also hungry at the same time. Humble enough to realize that you need to slow yourself down further, slow enough to where you can start, absorbing information, observing things around you, realizing there's other things out there that can help build your mental disposition up, your intellectual value up, whatever the case up, to put you in a position where you can then, translate that into a certain skill set or, a value investment or something like that to benefit off that time you put in to learn, that little bit of, information or that nugget of, of knowledge. And that's all we're doing here in terms of investing and trading. We just, what's hot today? What's hot tomorrow? What's hot a month from now? What's hot a year from now? How can I capitalize on this moment? What's my least path of resistance to get to my end goal? Right? What's my least path of resistance to get to my end goal? Once you learn how to refine that and understand how to do that, the rest is history. Stop being afraid to fail. First off, then number two, find out in your moments of failure, thus your moment is your moment to what? Rebound even better than your setback. I heard a brother say this the other day. I think it was what was the guy name? Dr. Umar Johnson. He said a setback ain't nothing but what did he say? He said setback ain't nothing but a bigger rebound for a better comeback, something like that, to that level. I'm paraphrasing. A setback ain't nothing but a rebound for a better comeback, basically. And that's how it is in the market. Right? Again, making good decisions though, and let's say a stock goes against you, set your stop loss tight. You don't just lose a ton of money to sit there and watch your money get depleted. Again, don't sit there like a deer in the headlights and know you taking a loss and you still sitting there with that hope in your mind. Say, oh, it's gonna turn around. It's gonna rebound here in a minute. You down 5%. Now you down 7%. Now you down 8%. Now you down 12%. Oh, it's gonna rebound right here, man. I'm good. Depending on how much money you put in that thing, if you put like 1,000 in that value net, now you down $80, right? Now you down $120, right? Now you down, you know what I'm saying? And you steady going down and start steady pulling back, and you telling yourself it's gonna rebound. Under what parameters got you feeling that way? If you're already down this much, because again, in that moment you realize to start doing what it's supposed to do. I didn't give it enough time to breathe yet. Meaning my entry was too off. Your entry was off. Because as soon as it hit a point and it hit that level of support, because again, you didn't try probably enough to realize that's where the most accumulation of people that were buying, or they've been buying and holding, came into that point as a major level of support, you would have known been waiting to get your order filled around near that point of what? Down there. If not close to it, you just playing the channel. What's my closest channel within that price of support where I see more heavy buyers came in at, and I see the stock pulling back. I need to be buying it at the lowest point possible. If I'm going, going long. If I'm going short, then again, you playing the top side. You looking for top side resistance. Where that top side resistance at? I'm gonna wait. Let it spike up a little bit. Let it act up a little bit. Let the spread tighten down a little bit. Again, let the bid and the ask slow down a bit. We can talk about 50-cent spreads and 70-cent spreads. 35-cent spread. No, that's too much of a big of a spread. Right? If you really want to get a maximum opportunity, you obviously talking about short selling, definitely need the tight spread, much as possible, because again, you know how this thing goes. That's why you already know the market against you from the gate, because you what? You buy on the what? On the ask, and you sell on the bid. Let that marinate. That means if you market order in on a stock, if you do a market order in, you don't set a limit order, you buy in on the ask and you sell on the bid. What does that mean to you? That means as soon as you hit that buy button on the market order, you already down. Especially if it's a big spread, meaning it's a big bid and the ask, the differential of what people asking for, what they want, to what's the next person looking to want to pay for it. So if you got a spread about 35 cents, right? And you come in, let's say, with $1,000, right? And 35, how many shares, whatever you get out of that, whatever, you do the math, but you get where I'm coming back with this. That's it, CG3, that's it. A setback ain't nothing but a setup for a comeback. You better say that, family. That's it. Thank you for bringing that to the chat too, family. Y'all need to copy that. Everybody need to screenshot that or copy and paste that, because some of you guys already know it, but again, that's what a setback is. If you're serious about understanding that failure ain't the end all be all to your life, or your level of understanding or growth, that means just go back to the drawing board, come back harder than before, right? So that's what it's all about. So, but again, that's why, I value putting in the proper work or the proper due diligence to be successful. As I always keep saying, due diligence, guys. Trust the process. I can't stress that enough. Trust the process, guys. I guarantee it's going to benefit you longer. And some of you guys that are 100% spanking brand new at this, trust me. Trust me. Do not put yourself in a position where you overstep your boundary. Take your time. Take your time. You're going to benefit from this. Do not let someone scare you away from being able to learn how to invest and trade. Don't let your parents do it. Don't let your pastor do it. Don't let your best friend do it. Don't let your spouse do it. If you're serious about learning how to become financially literate in aspects of ways of using the global financial markets at your disposal to be successful at garnering good or stationary supplemental income, then stay the course. Surround yourself with people that take this stuff serious, right? Understand how to use Google for what it is. It's a free university of information at your disposal. You do not have to pay tens of thousands of dollars and $5,000 of thousands of dollars to learn how to invest, from a so-called guru. Nothing against these people, because again, everybody sometimes may need that. But that's from what my understanding is, if you're hungry enough, you'll find a way to feed yourself. Let that marinate. If you're hungry enough, you'll find a way to feed yourself. And you'll be like, okay, well, how can I do that? Again, by using the least path of resistance to get there. The least path of resistance ain't going into debt to find a way to get out of debt, to find yourself hovering around debt. The way to conserve that understanding, obviously being you having distractions in your life that can mess you up, from being able to be successful, is understand how to, get to the bag without having to go through it. So, you finally say, okay, well, how can I get some free information without having to pay for it? How can I get some free information, without having to pay for it? Not having to go on Amazon.com and put in my digits, right? And you're like, how can I get me some free investing books offline and don't pay for that? See, right here, Amazon got some Stock Investment for Dummies ebook, right? They're gonna charge you for it. I go to go online, Google for free. Let me share this screen real quick here. I go to Google for free, and I'm gonna get ready to get off here, guys, because it's time for dinner, and my little guy got to get some nourishment too. All right, let me show you what I'm talking about here, guys, real quick. That's why I say, come on, guys, we can do this. We can do this. We can do this, guys. Right, literally for free. Learn this stuff for free. Again, mentoring is one thing, but getting information, you can, again, right, real quick. 100% right over, Chris. 100% right. Google and YouTube. Investing for Dummies, the 5th edition. I think the latest one is like the 7th edition, 6th, or something like that. Again, what's going to be different, that much different than the 5th edition from the 6th or 7th edition? 1 or 2 different extra terminology. That's it, really? Okay, I can deal with that. Right? So again, boom. Right? Downloads. You can download right 32 megabyte file. You can get this entire PDF, Investing for Dummies, right here, 5th edition. For how much? Free dollars. How much? Free dollars. How much it's gonna cost again? $3. No, Africa, boy, you killing me, man. How much that thing cost? $3. Cost you nothing. Somebody gonna say, man, go to Amazon, buy this book, man, Investing for Dummies, man. It only cost you about 13, 14 bucks, man. That ain't that much, man. What? Man, Google is like, bruh, $3. Hit that download button, get to reading. And then go look for other stuff, other investment books out there that you can get free PDFs on, fundamental analysis. Right here, guys, look at it. Fundamental analysis, how to read, a company's fundamentals. We're just going on a little bit of fundamentals a little bit, right? How much is this PDF cost me here? Internet, computer fee. What? Well, I already paid for that anyway, right? Okay, I'm in there. Boom. Right? Fundamental analysis, right? Again, all this stuff right here. All this stuff right here, guys. All of it right here. PDF right here. And the EPUB, e-publication book right here. And you got the PDF for $3. Fundamental analysis for dummies. Download value. $3. You see what I'm saying? All these books here. You see all the books right here to the left and the right? All these free books out here on ebooks just loaded, waiting on you. And here is someone that telling you, no, you got to go to Barnes and Nobles and Books A Million and all these, and Amazon. No, bro. No, sis, I'm sorry. I go right online, right? And get these books literally for free. Susan Orman, she even got her books here. Susan Orman 2009 Action Plan. That's a lot of good ones out there, right? We know plenty of good ones out there. Buffetology, right? Warren Buffett book, The Proven Techniques of Investing, Successfully Changing Markets. That how they made Warren Buffett the world most obviously treasured investor. You know what I'm saying? $3, right? So, let me post this one here. Right, you own it. Thank you, Overgord. You're right. Let me post this for you guys. $3, right? Copy this, post it to the family. $3, right? You know what I'm saying? So I mean, come on, guys, we can do this. We can do this. You can do this. Even if I'm not around or anybody else around, you can do this. Right? Beginner guide to, options. Free ebook. Right? Right. Some of them gonna require your email, and that's fine for some of them. That's why we tell people, as soon as you start learning how to invest and trade, you should be doing it before anyway, but build you a dummy email account. Just make up your little email account that you're gonna use for your investing and trading through, and go subscribe to a lot of these publications and sign up for a lot of stuff. Don't spend no money, but sign up for all these free stuff and get all these free ebooks and free this and free that. As long as you don't get no viruses, make sure it has security setting up there. You want to make sure your security tab is up there. But just go to downloading stuff. Literally, go download stuff. That's how I learned. Just downloading, Googling. I was already, had a disposition of understanding how, investment value. I wasn't day trading, but I understood market, investing. I didn't understand it at the level of day trader though. And I just went to Googling stuff, going to YouTube, and went to YouTube and just, man, light bulb went, but bro, it was like Christmas. I mean, hundreds and hundreds and hundreds and hundreds and thousands of hours of free video YouTube clips about learning how to invest and trade, technical analysis, fundamental analysis, support resistance, charts, patterns, positions, you name it. It's a plethora of free information out there. You know what I'm saying? Hey, what's going on? Over Sunlight, I see you guys in the house. What's going on, family? So again, I'm just showing you guys how to, again, you don't need me to tell you this, but I'm just showing you how you can be successful at using, the ability of free information to benefit your situation. And you using the least path of resistance to get there. Because if you go out and buy this book because somebody told you to do it, then you got to still wait on what? Wait on it to get shipped to you. You just lost a little money, and you could have went right online, Google, and got it for what? For free, right? Another good. Let me find this other one. Let me find this other book. Let me see if it's still available. Let me see if it's still available. Ebook download. Is this the one? Pay trading. I think this is one. This is the one. Let me see. I got several of them. I got a lot of these stuff in my Google hard drives. Some of you guys already got the files. I sent it to you before. But again, for some of you guys that's new and trying to figure out how to do this, hey, what's going on, family? I see you in the house, Swami. Thank you for stopping by, family. Again, you just learn how to use Google, right? And boom, you good to go. You know, you good to go. And it costs you nothing. You know, and it costs you nothing, right? So let me see if I can find this one book. I love this book, Pay Trading by Eric Shunk. I love this book, guys. It's a really good book to realize how, again, how to leverage the market. You know, the same way how you look at a job, so to speak, and turn, you know, $2,000 into $1 million in about 10 years or less. And don't tell me it can't be done, right? In 10 years or less, you can't turn, if you do trade the market respectfully and grow and evolve in this market the way you could, you know, under the right mentality, day in and day out, studying, becoming solid at this, you can't turn $2,000 into $1 million in about 10 years. You don't have 10 years to invest in your future, right? And that's your minimum. Keep in mind, that's your minimum target goal. Anything above that is what? House money. Again, I saw, you know, again, another fellow trader, buddy, and Stephen Ducks, you know, hit 1.1 million in a year. Last year, this time in May, July, that's when a lot of us, you know, started hearing about Stephen Ducks a little bit. You know, he was part of Properly and them Tim Sykes crew. I was my homeboy over there with Wolves of Wall Street, Billy. All them guys were kind of the same level. A lot of us, me, Stock God, a lot of guys, you guys know a little about it. But again, this guy, you know, he came in, parents gave him a little boost, right? Gave him like, I think he said like 27,000. He took 27,000 and grew that into 1 million. Took him about maybe a little over a year, maybe about 3 or 4 months. But he, from July of last year to July of this year, he made 1.1 million. Came straight off the streets like me and you. Came straight out of school, off the corporate America, whatever, regular person off the street, maybe whatever, McDonald's, whatever. And he grows in literally 1 year, 1.1 million. Trading the same stocks me and you trade, you know, still trading penny stocks, come on, guys. You know what I'm saying? You know, seriously. You know, so I just say, man, there's always a way, guys. There's a way, right? And again, this is a good book, Pay Trading. If you guys don't have it, get the PDF or get with somebody in one of the Discord rooms. You should see it in some of your Discord room resources anyway, and it should be in there for free. If not, I'll send it to you. But it's a really good read. Pay Trading. Safe to turn $2,000 into 1 million in 10 years or less. It could be done. Realistic, opportunity and goals right at your fingertips. All right, so I got this book in the Google Drive anyway, but again, I'm just showing you how you can look up this stuff for free, basically. You know what I'm saying? So again, options, you can go the same way. How to trade options, 101, stuff like that or whatever, whatever the case. So let me see if I can find a good one here. PDF converter, PE books download. Let me find a little easy one. I might throw this right on in the back chat. Saw wiki one. I think that one's, I didn't never get it from here, but I forgot which one I got it from. Step-by-steps trading, another one. This PDF right here just already hardwired to go straight to the macro or the PDF. You don't have to even do any kind of download. Another one, step-by-step trading. All right, I'm gonna post this one for you guys. Let me copy that. Step-by-step trading by Alexander Elder. He wrote a couple other books too, right? So another, so-called got a PhD. You got a PhD. I ain't saying so-called, but you got a PhD. Again, free dollars. How much this cost me, guys? $3. And you even tell me no, you got to go pay, somebody, thousands of dollars to be able to get this. Are you kidding me? Are you kidding me? All this free primary source information out there at your fingertips. So again, what I'm doing now is showing you how to eliminate excuses out of your life. The more you learn how to downsize your excuses, the more you learn how to upgrade your opportunities. Simple as that. Simple as that. The more you learn how to eliminate excuses from your life, the more you realize how to upgrade your opportunities. Simple as that. The fear leaves, and the opportunity, and having a strong mental disposition comes in like gangbusters. And now you're on your way. You see what I'm saying? Now you're on your way. All right. So again, simple as that, guys. So again, I'm gonna get off here, guys. I got to get ready. Got to get some dinner. Got a big week ahead of me, guys. You guys know I really get you to really go into every single thing that I really wanted to, but I try to stay on pace. But again, I only had a short window, only because again, I got the family here. It's the weekend. Again, family, family first. I don't have that kind of free time right now. And then again, we closing on a new property next week. So super excited for that, and humbled at the highest level. Humbled for that. Been a long 2 months journey here to get to this point. About a month, and about 2 months basically. But we're here at the end goal now. Finally got all this stuff behind us, so I can get back to focus on doing my mentoring, training, learning, and building with the family every day. Doing live streams, setting up some chart, picking stocks, getting after the market basically. Right. So I'm humbled by that. So again, I appreciate you guys, man. I can't tell you that, stress that enough, man. I appreciate you, y'all. I appreciate you all. I appreciate you all, man. We family at this, right? Whether you claim it, we family at this. All eyes and ears on deck every single day. We need each and every one of us every single day pulling the load, holding the line, and helping us, right? We the retail investors. We're going up against who? The owners, so to speak, right? It's like what the NFL going through right now. The NFL players fighting the owners right now, right? They're saying, hey, man, we got, value. We it's because of us to kind of keep this thing going here. Hey, we got issues here. We need you to listen. And that's what it is. It's the retail investor against these old, big bang, wild beast savage type, hedge fund, big bang investors just trying to, hedge funders just trying to convince us that, we need to be kind of, trading at their level, meaning holding stocks for an entire year just to get a crappy, 7% return. Ain't nothing wrong with that. Don't get it twisted, right? But at the end of the day, if anybody could have told you that you can learn how to invest in the market in a day trade and or a swing trade, holding stock more than a day, and you can find yourself making returns of up to 100%, 200%, 300%, 500%, 800%, 1,000%, 13,000% in one day, you would say you out your mind. Someone will probably tell you, man, you out your mind, bro. Ain't no in the world I can make 13,000% on return in one day. Man, you lying, man. And then you go show them. Then what the excuse is? Oh man, that was look, man, that was look. See, definitely you see, you limited excuses. Just being in the vicinity of the opportunity in itself is a win. Let that marinate. Just being in the vicinity of the opportunity in of itself is automatically a win. Meaning you, as long as you're around the bag, around the opportunity, you already winning. That's it. 100% right, brother Alabama. Thank you, brother Ja. 21% runner. You seen a 2100% runner last week. Again, I've seen stocks run 13,000%. I saw a 13,000% runner, ALRT. I got the stock in my portfolio still to this day. I left some shares in it as a memorabilia. We saw that stock come from under 001, 00 some change, and went all the way up to like what? It went up to the what was the price? It ended up around what? 13 or 15 cents on around there. Some all crazy. That thing went up 13,000% in one day. Let that marinate. 13,000%. And again, I know some people that traded right along with me and others that cashed out big money. The kind of money people like, man, you lying. That kind of stuff. You tell them about it like, man, you lying, man. They instantly want to call you a liar because they can't see reality or opportunity beyond their small scope of vision of what they've been boxed into in a slave type mentality. They stuck on punching the clock and saying, I know I'm only gonna make this much at the end of the week regardless, unless they give me time and a half overtime. So I ain't no use to me, there's no money out there for me to really make. And then you come along and say, hey, bro, hey man, ever looked in any kind of investments, for helping to kind of get you some supplemental income, real estate, something, start your own business stuff. Man, it costs me too much money to get into all that. Man, I got to go back to college for this and that. I got to, man, I don't got time for that. Like, no, bro, all that information literally free online. And you start trying to point them in a direction, they instantly just start, nah, man, I'm good, I'm straight. Like, how you straight if you claiming that you don't have time to even take care of yourself? How you straight? How can you convince yourself to tell yourself that you straight when you know you really struggling? Like, those are diametrically opposed. Straight and struggling are diametric opposites. No, I don't see straight and struggle as parallel. I'm sorry. They're diametric opposites. So there's no such thing as being straight and struggling. You know what I'm saying? As my mom would say, ain't no such thing as no have pregnant woman. Either you pregnant or you not. Right? Either you struggling or you not. And how do you not struggle? Using the least path of resistance values to be able to help you get to some goals, to hit you some goals, to get from that place of being in a struggle. If that makes sense, guys. Again, I ain't here to, be nobody's, preaching them, but I'm just saying, change your mindset, you change your bank account. If you change your mindset, you will change your bank account. Simple as that. And this machine that we're watching right here, this futures market here, this stock market here, again, is a great tool to use to help you get to a nice little level of something. You want to learn how to pay your mortgage off every month by using the stock market? Start investing properly. Learn how to get some nice swing trades together. Learn how to use the option market at your disposal. Learn how to use good critical due diligence to find stocks that can help you hit your end goal, where you don't have to come out of your own pocket to be able to pay for these opportunities or these excursions. You want to pay your car note off? You want to put your kids through school? Right? You want to, take a trip that you've been wanting to take for a long time? Right? You want to knock off some debt that you've been trying to do in a long time? Get serious about this craft. Understand how to do it respectfully and responsibly. And I guarantee you, trust the process. Give yourself enough time to make a few mistakes here and there, but don't make no costly mistakes. Again, make the necessary type of adjustments, right, to be solid at this. Again, I guarantee you, 2 years in the game, a year in the game, 2 years in the game, 3 years in the game, it's going to be lights out. It's going to be lights out. People going to be coming to you, man, and borrow 20 grand, cuzzo. They're going to call you cuzzo then. And borrow 20 grand from you, cuzzo. You got it. You know what I'm saying? You got it. I seen how you hit big. But again, and then you say, well, let me teach you how to go get your own bag. Then it's like, oh man, come on, man. No, let me show you how to fish. Let me show you how to do the same thing. Then you turn around and train this and teach this to your children too, and your friends and family around you too. Keep that domino effect going. Pay it forward. It's only gonna make you better. All right, and as I said, look at the futures market, guys. Look at the futures market. See what I'm saying? See how the futures market flat right here? See how flat the market is right here? Look at that. Dollar change, $4.20. Barely up 0.5%, barely up 0.4%, barely up 0.7% on the Dow. S&P struggling. NASDAQ got beat up real ugly Thursday and Friday a little bit. It definitely needed a rebound. NASDAQ hurt. Dow ugly. Dow still hurt. I always saw the S&P, right? Spider got over 280, was the big hurdle, big level of resistance. It finally broke that 280 level. But again, that's still a big benchmark level that it has to hold. If not, it's going to sell right back off and lose those gains. Because again, these trade tariffs and everything that's happening in terms of the oil, the commodity market, they in trouble. Even though oil had kind of broke out, a couple weeks ago, now the oil market back in check again. Now you got Iran again threatening, Trump with particular, war for other issues, surrounding the stuff that's been happening, the sanctions and all this, and it's gonna, mess up the OPEC, little kind of back end door dealing that they're doing to kind of keep the price of oil up. And it's high peak season of traveling, because it's summertime, so oil prices are in demand, gas prices go up, and now you got issues with the oil. This how this stuff is, guys. Y'all know how this stuff works. This stuff is not, again, it's not rocket science. Just look around you. Look what's coming out your pocket for what reason, and what dollar value amount than it was before at probably some later time. What caused the spike? What caused the inflation? And then learn how to use that as a benefit. Price of oil going up. Okay, they hit me at the gas point. The price of oil must be going up, or demand must be tight. Let me go invest in that company or the stock, or the commodity in a way where I can get those returns back. I can get some of that back. That's how you start thinking. Price of oil done hit a peak and it's oversaturated and it's flooding the market and it's more than it need is extended, off in the short oil. Time to take some off the top, time to short it. If the demand is tight and it's a big need for it, often to go long. I mean, this stuff is simple, and that parameter again, that's you still gotta go do the charting and all that too. Don't get it twisted. But again, you guys get what I'm saying. All right, so that's it, guys. Like I said, I'm about to get out of here, guys. Just want to do a little quick little weekend session. It's been a while since I had a chance to really do one. Again, y'all know my situation. The last couple months, I just been slamming tasks and and things I having to do, and obstacles and sort of way in a good way. In terms of being, getting this new investment property here. So again, when it's all said and done behind, we finna get back to work, right? We finna go work, right? We finna go get it, right? We're gonna do some live streams throughout the day. We're gonna call some stocks out. We're gonna look at some chart. We're gonna help everybody get to the bag best we can, whenever we can. That's what it's all about, having a good team around you, people that have your best interest in mind. Because again, that's why I love this too, because why would I want to see you lose money if I'm investing in the same stock you're gonna invest in? So again, I want to be just as right as I want you to be right. Right? I'm not your broker. Your broker wants you to have to go back and buy more, buy the stock again and pay commission. No, we need to get it right. Best we can, much as possible. Right? So again, that's why it's important that we stay on top of our game. So we all, again, get to the bag and again, minimize our failure value and realize the value that, we need to kind of find our way into the money, right? Much as possible. All right. So again, we just did like a little synopsis on Whirlpool. Again, Whirlpool got earnings coming up. Again, just keep that on your radar. Again, I spoke about Trivago. That was one I was posting in a lot of the Discord rooms and Twitter and on Facebook. I'm definitely looking at Trivago, right? They got a big implied volatility move it possibly could make. Again, if you look at the chart, on Trivago, man, that thing is they're talking about a 51% move, guys, on Trivago. An implied option move of over 51%, average move of 16% value in terms of earnings. I mean, this is a moment of truth for Trivago, because know why? That means it's at a key level of support. It's at a very key level of support at this point in time. And it's important that, in this moment here, matter of fact, where did I post that chart for Trivago? I think I posted on my Twitter. Yep, I did. Okay. If you look at this right here, guys, look at that chart. Okay. Look where the support levels at. $4.24, $4.45. Look, the stock came from what? $12. It came from a lot higher too. It's now it's all the way down to what? The bottom. So either that's going to be one heck of a doggone call, right? Or it's going to be an ugly put. It's going to be an ugly put or a heck of a call. Top side resistance $5. The first level of hard resistance at $5. After that, again, you can turn it all the way up and see where it's going to go if it obviously comes out and have decent level earnings. So now your due diligence is to go back and look for any kind of pressing foreseeable news that may help Trivago get out of this rut. Because right now it's at a very, very ugly pivot or a big double bottom, and it hit the same level of support sometime back in May when it was trading at about $4.30-something, $4.40. Now it's right back down to that same price, about $4.45. Very, very big play here, guys, going into earnings. Whether you're going to take it long off this bottom bounce or you're going to short into it and think they might not, hit, but that's a big implied volatility move that it's going to particularly have on the back end of its earnings, because this is a make or break kind of moment. Look at the volume, the option market that came in Friday. All right, read this. Fan of that market chameleon is what 9x normal volume, increase in volume. 3,760 contracts came in Friday. Call volume on the 18%, put value up to 82%. That was as of Friday. A lot of people shorting this stock. They may reverse and go long into, coming into Monday, whatever. But again, as of now, they were just, shorting into it. They thinking this company gonna possibly end up going to zero at some point, possibly. Because they can't compete with the Expedias and the price lines and those bigger ones. Trivago. Matter of fact, then I think somebody bought them or tried to merge with them or something. I forgot. I don't know. But anyway, they're in trouble. Y'all see it. They're in trouble. See right here. There you go. A year ago, this news here came off a year ago. It said what? Expedia Priceline stock drops after Trivago profit warning. Right? So again, Germany-based hotel research platform Trivago has issued a profit warning Speedy dropped to, that was like a year ago again. TripAdvisor, all this coming. Trivago stock plunged. What? It plunged 26% ahead of the open, putting it what on a track to open up a 7-month low after saying early Wednesday that third quarter and fourth quarter revenues will be lower than previously expected. So guess what? That was a year ago. It's still within that same yearly perspective. So this is the moment to turn around. So if this happened a year ago, if this news was a year ago and it had a 26% plunge on a low value of a 7-month low, meaning this particular guidance going forward has to be outstanding. If not, it's going to be lights out for Trivago, just like Pier 1. Pier 1 Imports, a little furniture company, because it's at its bottom low. It's at it can't go pretty much in the lower here. Besides, people gonna really get off the radar and leave it alone altogether now, because you had a year to fix this problem. You see what I'm saying? So again, it has to have positive news. Just like you're 100% right, brother Swami. It has to have positive news, because if not, it's gonna be lights out, and that's a big implied move of 51%. 51% implied move, man. Let that marinate, guys. There's gonna be some big return. It could be possibly, but that's just implied. It's speculative. Again, not saying it's gonna go up 51% or go down 51%, but I'm saying that's the implied potential move that could potentially end up with. Right. So again, the stock is ugly. It's ugly. You right. So again, just cross-referencing, guys, the information. That's all this stuff is, guys. Learn how to cross-reference information, backdate it to the news and the charts, and then learn how to, again, take your position based upon what's the most optimum level to get your entry to play the price action. That's it. I know it sounds like a lot, but it's not. It's just, again, dumb this stuff down, guys. Learn how to dumb down the market. We already been consumers, for the longest anyway. Learn how to use your consumer knowledge. Learn how to become like a CEO kind of mindset and your investment values. That's all this stuff is, guys. Switching the game up, playing both sides of the pendulum, right? Buyer, now you're an owner. As an investor now, you become an owner now of the company in a lot of ways. So that's all it is. All right, guys. So I'm gonna get out of here, guys. Again, I appreciate you guys for coming by, hanging out with your brother on the weekend. I've been wanting to do this for quite a while now. I've been behind. Again, a lot of stuff been going on. As you can see, it's dark over here on my side. I need to go cut my light on in my little office here. But again, you guys get it, man. You guys get it. You guys get it. Again, it takes a village, right? It takes a village. Yeah, you see the IV? That's 100% right, Swami. That's why I'm looking at it. Again, that's exactly why I'm looking at Trivago into the earnings. Exactly why I posted that one. Out of this whole week of stocks that got earnings, it's gonna be a lot of them. There's a lot of good ones too. That's exactly why I posted Trivago out of all of them. Why did I single out Trivago out of all of those stocks? Number one, it's super, super cheap. So if you buy the options, right, it's gonna cost you what? Dirt pennies on the dollar. Let that be the first indicator. And it has one of the highest IVs, right, and potential implied moves that it can potentially make on the back end of this earnings report, because it's a very critical earnings report for this one. Because a year ago from now, you saw, as we just read, it plunged over 26%. Obviously, a heck of a lot more than that when you look at the total overall aspect of the chart. You see what I'm saying? So just let that marinate, because again, there you go, Swami. Now you putting 2 and 2 together. It's the summer month, vacation month. People start to travel now. Again, but will those numbers off the last quarter reflect that going into this quarter, right? Because guess what? Most of those numbers don't really get tallied for a lot of the summer travel until the following quarter, right? Because even though school was out around May, people travel. Some of those numbers are baked in there. But again, July, August, a little bit. Again, you got a little more there too. So again, this might be a good quarter, regardless of the really kind of assess that value. One contract, $43, right? You say for which one? For on Robinhood is $43 for Trivago. Yeah, you can go right over to Robinhood real quick and see what those contract prices are looking like, especially if you're talking about the puts, right? Or the calls, either one. All right, so let's pull this up real quick. I need to have it up on my screen. I need to put my emulator back up so I can show you all those things. Like the option, Robinhood, now they got the web top, the website or the desktop browser, So let's see real quick. So let's say Oh, yeah, okay. Hey, my battery just died on my phone. Ain't that something? Anyway, y'all can go do this on y'all. My battery just died. I'll go pull it up real quick. Because right now I don't have it on my again, I don't want to have to go through firing up my TOS TD Ameritrade. I should have had it up already, but I didn't. I don't want to go through all that at this point. But again, you guys get my point. You can go pull it up. You can go with your Fargo site. Again, you can go see what I'm talking about. I mean, that's a big implied move. I mean, the second biggest one besides that, you got AXTI. I think the brother asked me about ABIL. Who was that? Brother Lewis. You asked me about Apple. Did you ever short Apple? Did I play? I think I played Apple. I don't know when because I play so many of them. You guys, I just like I remember it, but I forgot it. Right? But again, there's some stocks again that you just get used to playing and you remember because you've played them more than once or several times. And you're like, okay, yeah, I got this on my radar. But I don't remember last time. I think I played Apple a while back. Not recently. I can tell you that up front. I don't think I did. But again, I'm saying that Nick and Short's needing to recover. Apple may have some news coming out. It's on the pivot bounce right now, so it's showing that it's a bullish signal off this $5 level of support here. Just looking at the chart. The next level from there, if it breaks that, it can come down. So, definitely, if it breaks that level of support. And again, over the past month alone, and Apple obviously off that bounce because again, I showed it, when it made that spike run. That's the last time I showed it. Way back in June. I haven't touched it none in July, but when it made that spike move back in June, that thing went from what like $2 all the way to like 12. Right? Y'all remember that? It went up to like the $12, around like but the last week of June, so around there, that thing went bonkers, right? And it's been shorted ever since. Now they bring it back down to reality, and now they gave back, well over half of those gains that it picked up. Went from 12, now it's back down to 5. This is a key pivot point of support right here. So any kind of damning news at this point going to send this thing plummeting back down to the 4s and possibly 3s, back to the 2s where it came from a little bit, around the 2s and 3s level. So Apple, again, keep your eye on Apple. I know my brother Lewis, he asked about that stock. Real quick, I'll just show you a quick little screenshot of it. Then I can see I'm about to get out of here, guys. I gotta go. I'm hungry. All right, so real quick, you look at Apple. This is what Apple, we call it Apple. That's the ticker symbol. That ain't the name of the but Apple here. Look where the stock came from mid-June to where it's at now. All right. Again, you had that big gap up, squeeze up, also some solid news, shot up to 12, pull back, pivot off 645, shot back up to around by 8. That's typical how stocks are moving at that point when they kind of, still trying to find a range to trade out of. Trade within a nice little channel between 645 and really after that hit that 8 level round, really about 7.5. It's been in that like a dollar channel ever since ATR of about $1. In terms of the channel, I should say. The average trading range is pretty much what it moves throughout the day on average. But again, the channel value shows about $1 between 645 and 750. Right here is key level of pivot point and half mark here, and it broke that level of support again. Around somewhere around by June 15, 16, somewhere around there. If you go back and look at the chart in detail, it broke that level of support. That's 645, 650, and now you're back. Now you're down to what, $5, right? It dropped by 50 more cents from that 645. Excuse me, about $1. Excuse me, from 645 to near $5. Actually, more than that, $1.50. I take it back because it's down to what, 5.10 now, $5. So yeah, but it lost about near $1.50. All right, so again, this stock been in trouble, right? You see somebody here posted a little chart. Look where it came from, right? Look at it. Look at that. From June again, that spike went way up there above $13, right? Way above 13, pull back, and now it's pulling back. All right, now you channeling around like $5 and $5.50. All right, big gap down here from that $8 to down to where we're at now and turn like 550. All right, so either Apple gonna pivot right here and show some strength, or we finna get down. We're gonna see some fours, or you gonna get down into the fours here. Look at this ugly big old candle right with that ugly wick right there. All right, so from that part of the wick all the way down to this base top of the candle here, again, that's gonna be an ugly drop. It could drop that much in just one 1 minute candle, like it ain't nothing. And then from there, it can really get ugly. If you get down into this, the big body of the candle, you get some trigger, stop loss getting triggered. You can see the support levels here throughout the other side of the chart here. I mean, boom, you can have some ugly drops. You can have some ugly drops on the way back down to get back down to the twos. Like I said, twos inside this 2s and 3s level. So again, look where the stock came from, though. Again, another one of these stocks that fell from grace, so to speak. Trading at $50 a share, up near $50 a share last year, September. Last year, September, again, not, excuse me, last September, 2016, excuse me, 2016, 2 years ago, was trading at $50 a share. Last year, this time, the asset was trading, again, rough about 13 bucks. Again, we saw it, had news despite it got back up that level of support, let's give it resistance again, and then it sold off from there. But again, you're talking about a major move of the stock kind of pulling back and selling off, off this last, 52-week chart history. A lot of selling off been happening at Apple. If you go back further, it was obviously higher. Last time I looked at Apple chart, it's been a minute, but again, that's what I'm talking about. And now you got like a little retracement here, bouncing. Now it's pulling back, hit some key level support here. So if it doesn't bounce somewhere around this area here, right, this $455 channel here, and get back above that $650 level to get any chance to get back up to the $12, $13 level of resistance, kind of push back higher, it's going to be in trouble. So it's also in a moment of truth. So I'll be paying attention to Apple and going to its next earnings, right? Because it needs a strong catalyst to kind of rebound here, right? So again, that's the part of just learning how to, kind of diagram some of these positions, look at them, see where they at, if they have any kind of value, for, where you may want to take this out, because these might be some good little bottom plays, bottom, see where it goes, obviously to this next, foreseeable catalyst that may drive the stock up, or it may break down. Yeah, I crushed INT. Oh, Brother Lewis, man, I crushed INT. Some of you guys probably been watching some of my live streams throughout last week. I crushed INT. Y'all know I crushed it. Last time it had that big spike up, about a couple months ago when it went up to like over 30 bucks, and I shorted all the way back down to the team. I just hit it again recently. All right, my last time, most recent short, I hit it at $14, and I think I hit it short at $14.40 something. I started short at $14.20, $14.40. I took it all the way down to $6. I'll leave it at that, bro. I showed it from $14 all the way down to $6, low sixes too, like $6.18, $6.10. I showed it way down there before I covered it. I think I got like a little bit left in it now. I think I left maybe 100 shares left in it now. Oh, I was killing it, man. I hit that thing hard. I had like 2,000, 3,000 shares in it. One time I looked like 5,000 shares in it, short, pressing it down, crushing it. And I thought I was putting out like what, $2 grand, 1,700. Man, a lot, 3,000 at one point, somewhere around there. I forgot how much. I had to go pull it up, but I crushed INT, crushed it. So again, that's another stock that we didn't demolish. But yeah, it turned around and reverse and retrace and goes right back up again. Above $7, $8, then it's back up where it was before, back up in the 17s and back in the 20s again. INT is one of those crazy stocks that trades that way. High spikes up over 30, pull all the way back down in the low teens, comes all the way back down, bottoms out, around the mid-teens, low teens, shoots back up above the 20s, right? Goes to test the 30s again, right? And then comes all the way back down now to the $6 range. Yeah, I guess I'm the only one that talks about it because I talked about it a lot extensively. Go back and look at my old live stream last week, bro. You'll see INT in there, several of them. I was crushing INT. I was telling other Discord rooms that I was taking it short. The matter of fact, the day that it dropped from 14 out and it went like all the way down to what was it, like $8 somewhere around there, $8 I told every Discord room that morning that I was taking that thing short. Pre-market. Every Discord room I went in and told everybody, hey, I'm taking this thing short this morning. This is one of my victims this morning, guys. I was telling everybody, this is my victim this day. Now, that's why I always go into everybody's Discord room and post some of my trades if I can, or stocks of interest. And lo and behold, that was the biggest loser on the day, INT. And I gave that stock to everybody. I gave it to Twitter. I gave it to Discord room. I gave it to the Facebook group. I said, INT, I'm probably going to pull the post up. that grand rising that day that I took a short. But again, you know how this stuff go, guys. It's all, being in the right place at the right time. So again, that's why we trade. That's why we invest. That's why we do diligence. We do these things that's going to put us in the best position to get the best, return on our opportunities, from our hard work and due diligence, basically. And that's exactly why we do this, guys. So again, just one more look at the futures here, guys. You see the futures again, flat, like I said. Just like I said, the futures are going to be flat, open up flat, and here we are. Again, I'm no swami at this, but again, with all that kind of bad news happening, 9 times out of 10, it's going to be some hesitation to buy these futures contracts up when they know the market can easily open up ugly. If you go to investing.com right now, see what the latest news is. Guess what? They talk about BHAP survey, class action lawsuit, smart code down fade. That's a company you might want to pay attention to come tomorrow. Right? Again, that's why I stay watching news all day long, man. If there's a stock that could pay attention to that may hurt, it's not. Let me see, is this a company or this Global Mountain BHP? Okay, I go looking for tickers, man. So it's Australian Victoria State regarding 2015 code down fade in Brazil. Okay, you look into that. I look into that. But yeah, anytime some news pop, man, I'll be on it. People like, man, how you find them stock earlier? I'll be looking for news. I go bar chart, Yahoo Finance, I'll be all over, man. Benzinga, Market Street, Walker Watch. If there's some news that pop, breaking news that you worry about, I'm there. All right. As you see in my description box, I told you guys, I dropped some news about a company that's actually you had to buy over the weekend. This company, Atos, to buy a company Syntel for $3.57 billion. Right? And Syntel is actually publicly traded, right? In an all-cash transaction of $3.57 billion. That's a lot. That's including the debt they buy, the company debt up and everything. This stock, mark my word, guys, tomorrow when the market opens up at 4 a.m., SYNT, as you see here in my description box, SYNT gonna have a major pop, obviously, but they're gonna have a major pop in the pre-market. Look where it's traded at. As of Friday, it closed at what? At 0.28%, only picked up 11 cents on the day. And they actually got earnings this week too. They got earnings this week too, guys. SYNT got earnings. As you see right here, they got earnings coming up right here on Thursday. Right? So again, they got their debt bought up and extra price boost on their share value. I think it's like $49, $41, something like that, $49, something like that, whatever they're offering for it. Let me see, it's up here actually. $41 per share. $41 a share. Right? And look here. Going into the close Friday, what was happening? Everybody was buying puts. A lot of people are buying puts to start positioning themselves for earnings that may come out this Thursday that this company probably wasn't going to do too well. A lot of big puts was coming in. More put volume coming in. SYNT. And they just got through a lifeline. Look at the this is the old call volume. They were just trading, just day trading option stuff. But a lot of big puts came in Friday before the close to start positioning themselves for the week. Now a lot of these people that were buying the puts are shorting it, naked shorting it into the close, into the week. They're gonna get torched tomorrow. They're gonna have to get out real quick. They're gonna have to run for the door. As soon as they broke allow them to trade, they're gonna have to get out really quick. Because they are going to get squeezed tomorrow on that news when it filters and hit the stock. It depends on how far the stock jump. It may just only jump up like $2 and just hover around that point. Or it could just go higher. Who knows? But anyway, I'll be watching it. All right, I'll be watching it. All right, guys. I'm gonna get out of here, man. It's been an honor. It's been a privilege. It's been, as I always say, man. I'm humbled. You guys take out, busy times of your schedule to come hang out with your brother. Man, I appreciate you as always. I appreciate our think tank. I appreciate our opportunities, right? To be able to be in a position to kind of do this from a place where we only got to answer to each other in terms of helping each other. If we serious about this crowd, and it's no better place I'd rather be than going to battle against the stock market with a lot of you guys, man. I tell you, we got a unique opportunity here. Do not squander your opportunity to get better at this. Do not shortcut your ability to become the best trader you can be, right? Give yourself the adequate time and space to get better at this, because again, imagine yourself a year from now, imagine yourself 2 years from now, imagine yourself 5 years from now, right? Just imagine that. So stay the course, stay disciplined, stay hungry, right? Imagine yourself, again, when you surpass, 2 or 3 generations of your family and ability to garner the kind of supplemental income or generation wealth-based building income, that's going to, change the game, change your life forever. Because once you got this thing down to a decent methodology and a science to it, so to speak, even though it's not an exact science, but a good structure to be able to do this, you're set for life. You're set for life. I don't know people that have put in enough hard work, sweat, and tears, and even losses to get to a point when the light bulb really went off and they start making money, then they turn around and say, I'm done, and just walk away. You can, when your coffers are full, right? And your mattresses are overflowing with cash and your coffee cans are loaded with cash, whatever, but you don't walk away from opportunity like this once you learn how to get this right. And all you gotta do is stay patient and trust yourself, trust the process. Simple as that. And it doesn't require you to have a PhD in finance or in business management. It doesn't require none of that. None of that. You don't have to be some, again, MIT student or some, some person that just went to school to get a Series 7 license or a Series 6 license and understand how to invest and trade, accredited broker's license. You don't have to do none of that. I went right over to Google and got right. I went right over to Google and got right for $3. All these, free PDFs, stock charts. Learn how to create charts and learn how to build watch lists. All this stuff free. It cost me no money to go to Google and find these PDFs for free. For free. In the discussion, hands down. So again, that's the mentality, guys. Come on, we intelligent guys. Use them big brains, man. Put them things to work right. Right, and let's go get this bag. All right. So with that being said, guys, I'm gonna get out of here again. I hope you guys enjoy the rest of your evening. Power and profit to you all. Power and profit to your families. Again, get your spouses to support you. Get the people around you to understand that you're on a journey. This is a marathon and not a sprint. It's not going to happen all overnight, but I guarantee as long as you stay the course, you will be successful at this, right? There's nothing out there barring you from being successful at this, except yourself. Get outside of your head, learn how to stay disciplined, stay focused, and this thing will reveal itself to you. I guarantee it. It's going to reveal itself to you guys. I guarantee it. Again, a setback ain't nothing but a setup for a comeback. Again, a setback is nothing but a setup for a comeback. Let that marinate. Let that marinate. Right. So on that note, I'm gonna close out, guys. I look forward to the market. I know y'all guys are excited and ready to go. I didn't get a chance to really go into any kind of stocks I really was gonna be looking at for tomorrow. I went over a couple, but I really want to go into a little bit more stocks I was gonna have out to. But again, y'all see me in the Discord room. I post some of the stocks I'll be looking at for until tomorrow in the Discord rooms or the Facebook group or Twitter. Some of the stuff I'll be looking at. Again, I know you guys got your own watch list. You see me posted a few of them already. Trivago. Obviously we spoke about Whirlpool. Obviously, brother Onion here spoke about it, and we saw how Whirlpool is in a unique position here going into earnings. So if you guys think about trading into earnings, you're going to play it from the options market side of the house. You see that there's some potential there, right? And y'all see which way that potentially that it can go. Right, without me having to say it so many ways where we think Whirlpool gonna go, it's in a moment of truth. It has to get right, or it's gonna get gone, right? So again, I just want to put that out there. So again, appreciate you all, man. Again, I'm about to get out of here, man. Uncle Johnson Nail to you all, power and profit. My best to you and yours, and I look forward to the next broadcast. All right, so again, power profit, guys. Salute. The whole nine, everybody, little, shalom, all that. Hotel, to the family, Uncle Johnson there, Wakanda, we'll do the Wakanda thing too, whatever you salute to, whatever. My best to y'all. Until then, I see you guys in the AM. All right, and keep your eyes on crypto. A lot of y'all guys, gave me a lot of slack and flack about Bitcoin. And look, Bitcoin still. I told you guys. Remember this time last year, before it started priming the breakout. Remember, I was telling people last year this time, buy Bitcoin, right? It was traded at $2,000 a Satoshi. It was at $2,000 a Satoshi, a SAT, what we call a SAT, right? It went from that $2,000, it broke out and went all the way to 20 grand. Let that marinate. Right now, excuse me, we back at a what? A very strong pivot point. It sold off and bottomed out around 5,800 and showed a big level of support there, even though it still may have some downside on the way. But again, it's trying to get cranked up because guess what? Regulators are starting to look at it different now. We had some big news today that came out, right? That what? Coinbase, Coinbase been dropping a lot of news a lot lately. They think about adding more coins to the exchange now, but they also, right? They introduced a new portion of their platform where they're going after institutional buyers. They're trying to get the Jamie Dimons and the TD Rowe and the Barclays and Deutsche Banks to get on board, right? Somebody comes already starting to do it. We know Goldman Sachs already initiated themselves as one of the first prime, big hedge fund financial companies that's going to look into using the blockchain to help ramp up their business, right? They're doing a test pilot, but still, that's institutional money. That means they have to invest in the crypto space at some place to be able to kind of start that infrastructure test pilot scenario. What is that going to do to a lot of their peers? They don't want to miss out too. You know how these companies are, they're greedy. They want what? They want to be where everybody else is going, where the money is going, the smart money is. We already know George Soros got into the game, right? We know he came into the game during the springtime. Not only him, when he came into investing in the Bitcoin, who else came follow behind? The Rothschilds. Y'all know what I'm talking about when we talk about global domination, people that really move the global markets and the central bankers that's really got an influence on a lot of these. If the stock market as a whole, or any of these investment asset class, it's them big greedy jokers. So the Rothschilds followed suit. Then you got the Sinclair, Wahlberg, the Rockefellers, all of them start investing in the crypto all of a sudden. We already know they're already in on it anyway. We already know everybody got their hand in the mix of this anyway. We already know how this stuff goes. We ain't got to play conspiracy theory, but we know what's going on. But again, from a public perspective, that gave a joke to investors to say, wait, big money like that coming in, hey, let me hang around a little bit longer. This may not just be a great pump and dump or a bubble. So all I'm saying is once the SEC started regulating some aspects of it, allowing some of these companies trying to get them a little, ICO, mixed IPO scenarios in play where they can play both sides, like Kodak, the company, Kodak Film Company, that's another one, right? They got an ICO coming out now, right? And it's going to be regulated under some SEC IPO type principles, which is good. That's showing that they got some oversight. Even though it's still going to be ICO, that means it's going to have some level of what? Regulation, right? So again, that's all I'm saying, guys. Keep your eyes on it. Again, people wrote it for dead, and I was like, man, 6,400, good buy point. 5,800, I told other people that's a good buy point, right? Good pivots, good buy areas. And again, some people took my advice, boom, they up now. The thing what 7,500 right now. They already done double their money right now, and literally less than a couple months. But again, that's just me. I'm just leave that there. I ain't trying to tell anybody do what they do. Y'all know how this stuff go. If you don't believe it, read my disclaimer down below. I'm just giving my insight and my opinion. All right, that's why I have my disclaimer down in the description box. All right, but again, you guys get it. So right now, again, we're in a unique position. I'm just saying, just keep your eyes on it. It's gonna sell off a lot. It's gonna bounce. It's gonna be all over the place. Right now, it's getting killed right now. Matter of fact, where is it? It bounced. It sold off a little. It was up there around 810. Again, just I'm talking about B stage right now. It sold off a little bit, and that's going to happen. It's going to keep doing that for a minute until it really stabilize. But these are some good levels here to start looking at. These are some good levels, and I'm only saying that because at some point, when it breakout come in, it broke out last year around the same time, around going into August, September, started really catching steam, and it just went bonkers. Again, so look at the old charts, look at the old patterns, right? Again, these things are, are there for a reason, right? They're there for a reason. All right, so Bitcoin again is holding its own. So anyway, let me get out of here, guys. Uncle Johnson there again, Power Profit. Go enjoy your evening, guys. Until tomorrow, we'll be at this thing in the Discord rooms, Twitter, Facebook group, all of that. Check me out if you like the broadcast, guys. I typically don't ask this stuff, but definitely like it, share it with people. Let's get people excited about investing. That's all I care about, financial literacy. I have a passion, want to show people this craft and the skill set. So that's how I do it. I don't do it for, I guess for other reasons most people do this stuff. I do it for how can we help other people be successful at this? Because when everybody else becomes successful at that, we can make some moves, some group moves and all kind of stuff like that. That's the kind of stuff I get excited about. So definitely love the content. Share it. Again, y'all know I got my little links down there. If you're serious about want to get you a good leverage account, right? Y'all know I trade with TradeNet. Y'all know I got TD Ameritrade, USA, got Sarah Ally, I got Robinhood. But again, trading with leverage. You know, that's what's been helping me be able to maximize some of these bigger trades. Again, I've been using what? TradeNet. So if you think about getting a TradeNet account, let me know. I help you out. Again, I get to offer you guys discounted prices for their packages, right? And help you out with having a strong management team where people can oversee, any of your, customer service scenario. I use, pretty much some of the best ones over there. Officer Richard, I know Ronan, Officer, I know Ryan, I know all of them, Becky, all of them, Mayor, all of them. But regardless, whatever. All right, guys, I'm out. All right, so guys, enjoy your afternoon, your evening, and we'll see you guys tomorrow. Uncle Jocelyn, guys. Peace, family. Peace, family.